Ранку всім. Вітаю вас на конференції «Інвестиції в капітал для сприяння відновленню». Ми раді бачити вас. Мене звуть Анастасія Форіна, я старший менеджер з комунікацій проєкту USAID реформування фінансового сектору. Ми вдячні нашим партнерам.
We are very grateful to our partners helping us with organizing this event. This is the second in the series of events dedicated to the development of equity markets in Ukraine and their role in the recovery of the post-war economy of Ukraine. We are very much grateful to our partners, the investment capitalists, Dragon Capital and Investment Capital Ukraine, as well as the National Commission on Securities and Stock Exchange, as well as the American Chamber of Commerce. Today, we will be focusing on different financial tools, instruments. Why? Stock exchange, because stock market in Ukraine is virtually non-existent. At the same time, private equity funds are virtually non-interested in SMEs in Ukraine. Venture investors, at the same time, are only interested in technological startups, and most of the time abroad, but not Ukraine. The mass products such as insurance of war risks is virtually non-existent in Ukraine. Therefore, the instruments for SMEs are very much limited. Therefore, in order to open our today's conference, I would like to give the floor to Robert Bond, Chief of Party, USAID Financial Sector Reform Activity, with more than 30 years of experience in the Ukrainian market. So, Robert, please, the floor is yours.
Good morning and welcome. It's a beautiful day here in Kyiv. I would like to thank all of our partners for supporting us in this discussion of equity markets financing for Ukraine's economic recovery today. I think it's clear that the fact is that Ukraine needs financing of almost any kind imaginable, now and even more for recovery. We all know the World Bank's estimate of at least $400 billion damage to the economic infrastructure. In our previous conference, we talked about debt financing of corporate bonds, municipal finance, portfolio investment, and finance companies. Today, we will talk more about equity markets with a special focus on medium and small enterprises. But before we go into the details, I would like to take a step back and speak a little bit about the general. I think some of you have heard me before talk about legacy issues in capital markets here in Ukraine. And equity markets are one of the legacy issues because they simply have never developed the way they have in more modern European countries. And I think the explanation dates back to the failed privatization of the 1990s, and it includes insecure property rights, lack of market integrity and disclosure, lack of investor protection, and lack of enforcement mechanisms to stop fraud and market manipulation. This situation created an ecosystem in which private entrepreneurs positively avoided the idea of giving up any equity in their businesses, even if theory says this is the cheapest way to finance yourself. Today, almost half of Ukrainian small and medium enterprises have no external financing at all. As Ukraine moves forward to confront this legacy, it needs to achieve greater balance between bank lending and bank financing and equity markets finance. It needs to move more quickly toward European and international standards. It needs to signal to the market, particularly the European market and foreign investors, that Ukraine is a place that's open for business and welcomes foreign capital. I think a good place to start would be for Ukraine to adopt the IOSCO law, which has been being discussed for 15 years, which has almost universal support among international financial institutions and would send us the right message to foreign investors, which is we're open for business, we will protect your interests, and we will protect your property rights. Come and invest. So I want to thank all of you for participating today. I'm very pleased to see that we have a very good audience and we have a number of people online. I think it's important that on a regular basis we get the market together to talk and to discuss and to exchange views. I saw an old friend earlier today who said, hello, Robert, it's good to see you in person as opposed to being online. And that's just true. It is very good to see people offline and in person rather than online all the time. So thank you all.
Thank you very much, Robert. Наша перша модельна дискусія буде присвячена
Our first discussion is going to be dedicated to the development of different equity forms of financing. Let us take a look at the situation in Europe, how they finance their situation. Is this happening at the expense of their own capital or borrowings? Look, for example, in the countries of Northern and Central Europe, companies most of the time support this ratio between equity and debt at the level that doesn't exceed 4. At the same time, in the countries of Central and Eastern Europe, their indicator in this respect varies between 4 and 6. But if you take a look at Ukraine, in Ukraine, this factor is even above 6, which means that the financial companies, to a great extent, rely on debt equity, on financing debt when running their businesses instead of committing their own equity. So let us discuss during this first panel discussion this particular situation as well as the prospects of engaging equity into SMEs. And for that, I would like to invite my colleague, Pavlo Kostrometsky, who is the representative of Financial Infrastructure Team Lead on USA Financial Sector Reform Activity. Also, I'm inviting here Mr. Baranov, who is representative of Dragon Capital, Grigory Ovcharenko, Director, Head of Local Asset Management, Investment Capital Ukraine. We are looking and waiting for you to come up. Also online with us is Oliver Delamalier, Senior Trader, who works with equity capital markets at EBRD. Mr. Delamalier, as far as I know, is already with us online, and Till Bruett, Senior Director, Finance, Investment and Trade Practice, DAI Global, is also with us online. Hello. So, dear colleagues, I wish you a very constructive discussion. Thank you, Anastasia. Hello and welcome, everyone. We are very happy to welcome you and see you today. Something else that we would like to underscore, something that hasn't been mentioned yet, is that synchronized interpretation is enabled. Therefore, if you are online with us, minded that you can opt for the English or Ukrainian channels and stay on it throughout the whole event. I'm also very happy that we are holding this event together. We thank the Armed Forces of Ukraine for this opportunity and possibility. Along with that, I have to inform you that unfortunately, 2 of the speakers planned are not going to join us today for this panel discussion in particular. Therefore, we will be able to speak more freely in terms of time, and because we're not going to see the representative of the National Commission on Securities and Stocks and Shares of Ukraine, so we will be able to speak perhaps more directly and formulate our thinking in a more straightforward way concerning its shortcomings. Therefore, I think our discussion is only going to gain by that. Okay, so thanks to all of our guests and participants. And the first thing that I would like to question you about is, considering the results of our previous conference when we focused on debt investments, debt investment tools, I would like to hear your views, your thoughts concerning whether or not we have to take care of equity financing. On the one hand, debt financing is simpler. On the other hand, we have had to hear that if more enterprises in Ukraine were directly financed with equity at the time of the full-scale invasion when that erupted, it would have been much easier for them. So in terms of equity financing, there is a particular mechanism embedded, the mechanism for risk protection, the risks that unfortunately took place in Ukraine. Equity financing is more expensive because the anticipations of investors, most of the time, they always try to look for opportunities to invest instead of investing in securities that protect them better. But for that, you have to present them with a lot of advantages. I'm not going to provide you with my thoughts. I just want to hear, I want to just us to probe through this topic. Could you kindly share your views and your ideas? So let us just take it in turns, colleagues. I suggest that we start with probably maybe with Mr. Olivier, because he's the first on the list, if you don't mind. So, Mr. Olivier, if you don't mind, we would like to hear your views, if we may, as an expert.
Good morning. And thank you very much for the invitation. I hope that you can hear me well.
Yes, we can hear you well.
Sorry, I didn't hear that.
Yes, we can hear you well. You can proceed.
Very good. Thank you. I just heard the translation. Thank you again. Your question about the need for equity, I mean, it can seem quite an obvious point because you mentioned debt financing earlier, which indeed is important, but it seems difficult to imagine for any private endeavor, private sector endeavor, ability to get financing without a strong layer of capital, which is needed to absorb, variable cash flow and absorb losses on an ongoing basis. Also, important function of the capital is to be there for the long term. For the permanency is absolutely critical for investments that require long-term investment and capex formation, and obviously very deep subordination to support other classes of liabilities. I think we could talk about private equity or public markets, but if I focus first maybe on the private equity side, the EBRD economist periodically analyzes investments in a region, obviously including Ukraine, in Central and Eastern Europe, and what you were describing earlier, I think applies unfortunately to many of our countries of operation in the region, namely that there has been a consistently underutilization or underinvestment in the form of equity, whether you measure it by overall size or private equity investments per GDP, for example, which we did a couple of times. Roughly, if I recall, a former analysis, which now made it a little from a few years ago, but roughly a third of the addressable market, i.e. the investable universe for companies, only was deployed in private equity. And there's clearly a very large opportunity for private equity to be deployed in the region, and it's absolutely crucial. I think there's always a debate as to how private equity provide returns and how they add value, whether it is due to operational improvement or leverage, which is a very frequent critique that we hear. I think it's important to see that obviously private equity companies are very diverse and you have a lot of strategies, but I think that the region in which they operate can make a big difference. I think in the most developed market, like Western Europe or US, indeed buyouts with high leverage are more common, but evidence suggests in our region, including especially Central and Eastern Europe, that what private equity funds in our region focus on is indeed operational improvement, such as scaling up operation, increasing capex, and evidence suggests that companies that receive such investments show growth, show increase of labor productivity, and so tangible improvements in on operational and top line growth side, which last even after the exits from the investor, which I think obviously can make a big difference to the companies, but to the economy as a whole. So we see that as a force for to create a more diverse financial infrastructure and provide real expertise and long-term risk capital to the region. And to go back to the equity, to the debt that you mentioned earlier, such investments from private equity also obviously provide greater access to credit market, whether it's from bank finance or debt financing. And yes, it also means in some cases higher leverage, but it also creates a clear boost for company growth.
Thank you, Olivier. Till, please, your turn.
Yes, thank you. So the short answer to your question, of course, is yes. But I've been given 4 minutes to speak, so I'm going to use it. First, I wanted to thank you all for including me. I was in Kyiv for the originally scheduled event. Unfortunately, I was able to come this week, but I'm really happy to attend remotely and be part of this. I'm just sorry that I won't be able to spend time with all of you and learn from you. And I wanted to pick up on something that Dr. Bond said. We are here to talk about equity, but it might be helpful to talk about equity in Ukraine in the context of external financing in general, debt, equity, leasing, trade finance, etc. And I think with all firms, the question of whether or not you need equity it's not really the question. All firms have equity. Most of the firms have equity, which is based on what their owners put in, what the partners put in, or what they've earned over the years. I think the real question is, do they need third-party financing at all? And it's a fair question because even in European markets, if you look at the small and medium-sized enterprise access to finance surveys, only about 75% of businesses across Europe have ever had any kind of third-party financing. And really somewhere between half and 2/3 actually use third financing at some point during a year. So the real questions that firms need to be asking is, for what purpose would I need external financing? How much do I need it, or how much do I need and for how long? And then what is available and at what price? So these are really the three questions. It's not really a question about, do I need external equity? So in terms of those three questions, I would say in a perfect market, small and medium-sized enterprises could focus on the first two questions. That is, for what purpose do I need financing, and how much do I need and for how long? However, markets aren't perfect. And so often small and medium-sized enterprises start with the third question, which is, well, what's available and at what price? And then the second question that firms need to ask themselves is really, why do I need this financing? And if you look across the 20 European Union countries, most SMEs use third-party financing for the following. The primary is fixed investment. So fixed investment is still one of the most common purposes of financing. Close to half of firms that are using external financing use it for fixed investment. And then just slightly less than that, around 35 to 45%, depending on the year, use it for inventory and working capital. And so this makes sense. I mean, larger investments for small and medium-sized enterprises require much larger lump sums, whereas just covering your inventory and working capital costs are often easily covered by cash reserves and cash flow. So back to your question, now that I've used up 3 minutes, do we need equity? And the answer is, it depends. I think for most small and medium-sized firms that don't have large capital-intensive investments to make and aren't in a rapid growth mode, they can probably mostly use their own funds combined with some form of debt financing, and that's what most firms do. And even short-term financing can actually help in terms of equity, because short-term financing, if it's reliable, can release a lot of that working capital to make longer term investments. So I do want to emphasize that while we're thinking about equity, we also need to think about how do we make short-term financing, working capital more reliable in Ukraine so that firms can reliably use that, not have to use that financing and free it up for their own investments. However, if you're a firm that is a fairly large size firm or medium size that's profitable, that has a capital intensive investment to make, then probably yes, you need a combination of equity and debt. The equity to provide the cushion, as Olivier said, but then also the debt on top of it in order to increase the amount that you can access. And then second, which is really a more recent phenomenon in our world of venture capital and angel investors and also private equity growth, we see a lot of equity financing going to a very few high risk, high return profile companies, mostly that are involved in digital issues. And they're really there because they offer high rewards. And so it's more of a bet as opposed to the more traditional use of finance. So the answer is yes, but it really does depend. But I think one more question I just want to point out is the question of, do we really want equity and what it brings with it? And as Dr. Bond also mentioned, taking on equity requires a lot. It requires a lot of a system and it requires a lot of a firm. And first and foremost, it requires a lot of transparency and responsibility and answering to someone else. And honestly, most firms, it's not that they aren't interested in doing good work or being transparent. It's just that the business is their business and they don't want it to be anybody else's business. So in fact, even in the European Union, if you look, only about 6% of small and medium-sized enterprises indicated any interest in getting equity, far less than the more than half that mentioned that they wanted to get credit in the near future. Now, one last point, and then I'll be quiet. And that point is that how many firms in Europe actually do get equity? And the answer, it depends on the market, but on average, it's only 1% to 2%. So we think of equity, I mean, it can be as high as 5 to 7% in some countries, but when we think of equity, it is actually something that is fairly prized. So it's something that's important to set up, but also something that, as we've seen in Ukraine, without you can survive for quite some time. So back to you, Pablo.
Thank you very much, Till. Some excellent points here. Gentlemen, your turn, please. Yevgen.
Доброго дня. Дякую.
So, good morning. Thank you for the invitation, and I thank to the previous speakers. I believe they have already answered the question in a profound manner. So I would try to complement their points, since we are the private equity investor. So for us, the question whether it is yes or no, well, we don't have this question over the past 20 years, because we are confident that the answer should be yes. Whether there is a kind of a difference or a selection between the equity and debt financing, I don't think that it's a question of selection for Ukraine. Or I agree that Ukraine needs any capital. It could be debt, it could be equity funding and financing. The more investments we'll have, the more chances we'll have for the further growth of the economy. I mean, even considering this possibility that we'll be developing from a low standpoint. Now, it's all about the balance between the debt and equity financing. Now, every sector of the economy, surely every firm would have an individual response to this question. Pavlo, I don't agree with you saying that the equity capital is more expensive. There's a number of reasons. I believe that the next year and a half, 2 years, the whole world would be living in a period of high cost of capital that, together with the Ukrainian risks, will make debt financing pretty expensive for the Ukrainian firms that talking about the equity capital, we are talking about the division of risks. We can count on fairly significant ARR, but still there is a risk of not earning or losing money. That's first. Second, in most of the cases that I've seen in our history, we brought, in addition to the money, we brought on the table a lot of knowledges, a lot of access to the other markets, access to debt financing, accountability and transparency in the way the companies are running their businesses, and taking those firms or companies to the next level in terms of certain knowledges and know-how. Talking about strategic investors, I think that we even have more of that. And thanks to the equity capital, some of the companies in the east of Europe, they've created new sectors of economy that are very important for those sectors of the economy. So now it's not a question of whether it's necessary, it is necessary. So the question of a state policy today, how to make those conditions for having more of this equity capital so that we would have more competitors on the market. We feel the need in capital today, and we also understand that debt financing is expensive today and it's hard to be reached. And talking about capital intensive projects, there has to be hard collaterals. And today, any physical assets, they are carrying the risk of a physical destruction. It can be insured because we have a first success case, but that was only one case per many thousands, and the access to these insurance is very limited. So the question of availability of the mortgage and accepting the providers of the debt financing to have this mortgage, it's additional limitation. That is why the role of the equity capital should be greater on the conditions that the partner who is ready to share the risks could be cheaper, could be much more favorable than trying to get some debt financing where you're taking all the risks by yourself. So I guess this is the issue of coordinating efforts of the state, of the market players, all in all, to provide the level of comfort that would allow the new players and the providers of the equity capital to appear on the market. Thank you. I thank you, Yevgen. Now, Grigory Ovcharenko, please. Good afternoon. Thank you for the invitation. And the answer to this question is fairly simple. Definitely, whenever we're talking about the operations of the firms on the condition of the crisis, particularly on the conditions of the war, we're talking about the consistency, the ability of the companies to operate under conditions of uncertainty. Whenever we are talking about the needs in capital, then we're saying that this capital and its proper balance between the capital and the debt, it creates more opportunities for the companies to survive under conditions of uncertainty. So it offers more chances for the firms to run continuous operations under any conditions. This is exactly why we need to increase the capacities as well as equity financing, as this would increase the opportunities for the firms and businesses. I thank to Grigory. So let me have some summary before coming to the next question. First, thank you for your comments, and I would like to remind you that we're talking about the recovery of Ukraine, and of course we would like to talk about the recovery that should be taking place already now, without waiting for tomorrow or the day after tomorrow. So whenever we're talking about the recovery of Ukraine, I think we don't have a question whether we are talking about the attraction of the foreign capital. That's part of the context that we have for today's dialogue, meaning how the foreign funding or external funding is the best, or how to attract it, how to use it in the best manner. So I believe we can agree to that. I thank you for the statistics and the figures that you've mentioned, and I would like to focus on more quality manners that are hard to assess, but still they are the most important, meaning something that each party can bring to the table of negotiations. And you were absolutely right to mention that while the IRR expectations of income from the project could be high, still they are related to a significant risk. So the expectations might be in fact lower if someone is counting that. Surely the risks have to be taken into account, but the IRR for a commercial investor who's simply comparing the equity financing and the opportunity costs and other options, well, surely he will understand that debt financing is more simple and more straightforward. So I wanted to come to the next question. I know, please correct me if I'm wrong, or maybe compliment me. Let's focus on the second question. We're saying that equity financing is definitely important, but let's take the next step. If we're saying, like, what type of equity financing are we talking about? Private, direct, or kind of shareholders? Funding. Surely that requires even more transparency or systematic approach. So let's talk about these questions: the balance, the transparency, the regulatory burden. What are the advantages? And do we need to strive for the development of the situation by using the shareholders mechanism, or should we focus on the issues of direct funding rather than to make possible for everyone to work in that aspect? So let us move away from the scenario that I've prepared, and maybe anyone who would like to take the floor. Okay, then we'll start with Olivier once again. Or anyone else would like to take the floor? No, Olivier, please. You have the floor.
I'm not sure I got the question. The question is whether we should focus on private or public markets or both, or
Right.
I'm not sure about the translation.
Yes, right. The question is if we could look at private financing and stock financing, right? What are the pros and cons for each of them, and what should we focus on as the main instrument for recovery of Ukraine, given everything that we've said so far?
Well, it appears that right now, if I look on the, let's say, the rebuilding phase, and if we project ourselves a little bit, the private side seems to be the easiest path, because developing a full capital market ecosystem obviously requires a lot of work from the investor side and the infrastructure and the issuer side. So it seems obvious that it is a long-term project, an important one, I believe, because capital market development is actually part of our mandate, but it must play a big role for the capital raising on a big scale, because simply you have access, when a market is developed, to a much deeper pool of investor than simply the private side. But again, it's not. It takes a lot of time. So as a first phase, it seems better to focus on the private investment, private equity investments, which requires less, let's say, infrastructure investment and ecosystem building for the capital markets. But I would say, both are important. The public side is probably a longer term project, which we can maybe discuss at a later stage. But that would be my first take on your question.
Thank you very much. Till, please.
Yeah, thank you for the question. I mean, I think Olivier, of course, is in the short term. I think private equity is going to be the way to go. DAI works in a lot of different countries in partnership with USAID, working in private equity from Rwanda to Myanmar to Colombia. And we've had a lot of success working with a wide range of investors, from impact investors to family offices. And that usually is a starting point. But I do think that at scale, in terms of capital markets, just a few comments. One, I think in the 21st century, we've seen a proliferation of stock markets, and at the same time, a concentration of volume in just a few markets. For example, the United States now accounts, and its markets now account for close to 60% of all global equity value in the world. And as Olivier said, it's because of the deep pool of capital that's in the United States. And then if you look at London, London's in second place with about 4%, but it used to be 13% just 15 years ago. So it gives you some idea how London's own stock market has shriveled in compared to the rest of the world, and the challenges of keeping an equity market in a country with a smaller capital pool alive. And then if you look at France, Switzerland, and Germany, if you look at their markets, the equity value, all of them are less than 3% of the global equity value. And then one last point is, I think it's about finding the economies. If you can't find the economies of scale, then the economies of scope. So I know under the previous USAID project, the financial sector transformation, there was a concept that was being discussed, which was to combine the capital and the commodity markets in order to get that economies of scope. And I think in the context of Ukraine, that is probably the way to go. Otherwise, I think the other approach is consolidation. Because if you look at Europe, NASDAQ owns 7 of the exchanges in the countries in Europe, mostly in the Nordic and Baltic states. And then Euronext owns another 6. So we've already seen a consolidation of ownership of these exchanges under a few companies. So as Ukraine thinks about it, I would think, yes, it is important for the long-term development to have a public market, but at the same time, I think going it alone is probably not the solution. So thank you.
Thank you very much. Evgen?
I suppose it's hard not to agree that in the short-term prospect, the only way for us will be private equity. This is the only way for us to pursue, because public equity, to be frank, and the access to the markets of public equity is non-existent from my perspective nowadays for Ukrainian companies, I mean. And even after post-our victory, it will be very much restricted for just available for a narrow circle of companies, because there are these issues of legacy mentioned today that we are all way too well aware of. And there are also some specific issues concerning Ukraine. There are also fantastic Ukrainian companies who are entering the markets of neighboring countries, including Eastern European countries, markets. And I suppose this is perhaps the angle that will enable us to expand the range of the companies gaining this access. However, still, this will still remain a small number of companies having access to this equity market. Therefore, I suppose this is a fantastic strategic goal. But the question posed is how are we to pursue it, either by way of consolidation with Western players or by way of looking for some specific tools. I suppose there is a great capacity and potential in terms of accessing private money, which is right now found either in banking institutions or hidden under mattresses. So the question is how to get that involved in the market. And I suppose that there should be developed a particular strategy, how to start with the instruments and tools which are understandable to private investors. And we all know that now in Ukraine, the private investor in fact knows only 2 instruments, which is bank deposits and buying real estate. And I suppose the first step to pursue the strategic goal of development of public market has to be undertaken around real estate sector, because I suppose that the government has enough opportunities and capacity in order to come up with products with nearly guaranteed returns and enable people to buy 1 or 2 square meters in the future, which they cannot do right now in the current market capacity. And once again, there has to be guaranteed return on investment where the government can become a leaser of this kind of property. So slowly but surely, we have to start training and teaching people that there are tools of public equity, which may be much more interested than bank deposits and quite reliable, because with this legacy, negative legacy, both for the foreign big players and national investors, we have to start fighting for them. So this is the idea which is available concerning engaging big international capital, I suppose. As we approach the next question, I will speak more about that as I share my presentation. Thank you. Thank you, Grigoria. What's your idea? Indubitably, I also agree with the previous speakers that at this point, for Ukrainian businesses, it's easier, simpler, and cheaper to obtain private financing. If we talk about long-term prospects, though, from my perspective, it also requires developing this respective infrastructure and conditions for public financing, because in the first place, this will create the conditions for the operations and functionality, the conditions for accessing the market. Secondly, this will also make understandable benchmarks for both of the parties, both in terms of the market value of the capital and of the market itself, the involvement of businesses. And thirdly, which is no less important, this will enable the access for these companies of a greater number of institutional investors. Therefore, the strategic objective, as it usually is the case for SMEs, is via attracting private equity to pursue the next step, which is gaining access to a wider circle of investors. Thank you. I suggest that we move on to the next question. And here, now that we have already outlined our discussion and that we have already put these beacons, from my perspective, we have managed to do that. Now we would like to zone in on the current situation in Ukraine. Let's focus on the Ukrainian market. And in the first place, I would like to invite our guests who are with us here in our hall. Yevgen, for example, what are your comments concerning the current situation of the Ukrainian equity market, equity financing in Ukraine? What's it like nowadays? Well, we have already started discussing this question even in the first part of our panel discussion. I suppose that the access to equity in Ukraine is highly restricted. And I think it's the common goal for the government and the players in the market to make sure that there are a greater number of incentives to incentivize a greater number of players to come in and enter this market. Because when you get to see what's happening nowadays in terms of different privatization contests, competitions taking place, even in the sectors where the risks are pretty low, for example, in real estate, I suppose this is the largest segment in which the government has already demonstrated the success of privatization competitions. But you will see the same players there all the time. These are local players. Nothing is changing there, because even if different kinds of competitions and bidding procedures are conducted during the follow-up 2 months, I can immediately guess 5 to 6 players who will be coming into this bidding process. So I think this limitation, this restriction of the base prevents us from expanding the scope of investments. I don't know whether it's going to work, but I very much hope that You will be able to see that the slide is understandable. It's straightforward. I'm not going to dwell long on that. This is the correlation between direct foreign investment and the growth of GDP. So here the question is, we are pursuing a goal. We have an objective to increase the direct foreign investment substantially and thus make sure that the economy is expedited. On this basis, within of the 5 to 6 players which are available nowadays who are providing their private equity to the market, plus respectable representatives of FDI. If this continues to be the same, then this substantial growth it will be virtually unattainable. Therefore, there is this strategic question at stake: how to increase this funnel of the interested parties. And here it seems to me that we have to think more about focuses. My presentation is called Greed versus Fear. And I suppose that the government nowadays is very badly focused on incentivizing greed. And this is great. This is the investment decision when greed overcomes fear, beats fear. But the problem is that fear is a much stronger emotion than greed. But why are there fears concerning Ukraine? I don't think that that requires any explaining. This fear is really prevalent, and there's a lot of it. And when focusing on creating some incentives which might enable us to increase the gains on projects like investment nannies provided for, I think it's a great thing. But once again, this is only great for those 5 to 6 titles which are commonly known. And most likely we are going to look at that in the following way. We are not going to be 100% sure that these incentives will be operational, that they will work. And if we like projects without those incentives, we'll still opt for them if we see the proper mathematics. And if these incentives come true, this will be a very pleasant bonus for us to gain. However, this is not helping in any way to others on the other side of the river who are afraid to bridge this river, to cross this river. So I suppose that the main focus of attention nowadays has to be fixed on how to create the prerequisite conditions that will allow the new providers of equity to overpower their fear. The fear that there is no rule of law established in the country, that there are some past legacy things that will catch up with us, the fear that there is bad regulation of relations between the shareholders within respective companies. And I suppose that that's something that the government has to be focused in terms of establishing rules. And if the government is a seller, the seller, and it seems to me that in the nearest 2 to 4 years, the government will become the greatest seller, given the number of assets that are state-owned and state-run versus the pool of assets, which I very much hope will become part of the state-owned property as a result of nationalization. This process has already commenced, and this pool of assets, something which is an arm of AXA and the State Property Fund, they already own a huge pool of property. So once this happens, the state will become the greatest provider of agreements and contracts for the next following years. So my message to the representatives of the government, who unfortunately are not here with us today, is to get thinking that the investment nannies are necessary not for the ones who have already invested $10 million, but for those who are thinking about whether or not to invest this $10 million. This personal manager that many might need, that might tackle and troubleshoot for the problems, because our experience speaks in favor of the unfortunate fact that the government as a seller is a rather irresponsible seller. It assumes the position to buy things as they are. Let me just give you some illustrations, at least in the next slide, from our experience of participating in such stories. How does a competition usually take place? Some 2 to 3 months before the bidding procedure, some representatives of the governmental institutions begin to vocalize that in interviews that they are preparing for sales. Chances that some new international investors will hear that are really slim, next to nothing. Then 2 months after that, 45 days before the bidding procedure, more detailed information emerges, but most likely this will speak about the fact that there are a couple of pictures, additional facts. But for additional information, most of the time you will have to go personally to the State Property Fund for you to pick up the relevant information and to read that. So you imagine that you're an international investor based somewhere in New York, in London. You have 45 days to make sure that you come to Kyiv. This is already a crunch. And then getting familiarized with the information, do some due diligence, because we only saw a vendor of due diligence just once. Maybe there were some more because we haven't participated in all of the bidding procedures. And then you have to take this decision. So within these 45 days available, so in 25 years of my experience, other than buying real estate, I haven't seen a single contract that could be squeezed in this time frame, not a single one. And I cannot imagine how this can be realistically done. This has to be so cheap that you will be ready to assume any kinds of risks, just because this is going to set you back virtually nothing. But I don't think that this is the right way. And then what happens? Even that case that we have at vendor due diligence, I'm not going to name the object. At that vendor due diligence, you may read, for example, about this in the section of taxes, that the primary bookkeeping isn't done in the company, or we haven't been able to locate the documents. Confirming financial outputs or deliverables is impossible, and tax risks are also impossible to be assessed. As a local player who does not require a lot of NEDIs, we immediately reach out to the tax service at the place of the company's registration, and we say, there is this company, what do you know about it? And they say, we haven't been there a single time. And we ask them, why? Why not? And they say, well, because it belongs to a very reputable governmental institution. Why should we go there? And we say, what if we buy it next year? And they say, next year you will be put on the list to be checked and inspected. So how am I to assess these tax risks? We go to the seller and we say, are there any guarantees in terms of tax risks, any other risks? During your time of owning this company, we just want to make sure that during our time of owning, we will be responsible, but for your time, you will have to be held reliable for them. There are no such guarantees, and the government wants to make sure that the buyer buys this property just as it is. So if we multiply all of this by the so-called pre-sale preparation, will anyone come to these kinds of market sales? So I think, once again, all of the participants in the market, the government and the players, have to focus on establishing the conditions that will enable us to overpower the fear for the new capital to come to enter the Ukrainian market with additional bonuses in terms of tax breaks, etc. I think all of this is wonderful, but from my perspective, this is not going to expand this funnel. Therefore, I would encourage all of the participants of this process, all of the members of this process, to start thinking in this paradigm. We need to be helped to find the toolkit that will enable the entry of any new investor as safe as possible. We need to address their needs as much as we can, but not hope that our assets are so cool that there will be a line of investors wanting to buy them. Because if we sell things next to nothing, then of course this line will increase. Thank you.
Well, thank you. Now, Grigory, please. I would like to start in response to Yevgen's words that unfortunately the circle of the internal investors is limited. We don't have any access to have any possibility to attract foreign investors. Many years in the history of Ukraine, we're facing with this need for attracting external investors. We had this several times in 90s, in 2000s, in 2010s when there was an increase in the number of investors and there was a recovery of infrastructure, and even on the eve of the war, thanks to simplifying the access procedure to the Ukrainian capital, there was an increase in the amount of foreign investors. So everything was wonderful. But in most cases, unfortunately, the majority of the investors, of external investors, were losing their investments, were losing their equity, and there was this bad aftertaste. So what do we need to overcome those burdens or obstacles? Let me kind of sum up the whole situation in order not to cover all the negative aspects. Now, what you can see is the Ukrainian borscht. And thanks to Klopotanka, that has become a Ukrainian heritage. Now, it's composed of many ingredients. So if you don't have it, you don't have a component, then you don't have a taste of Ukrainian borscht. So if you take a look at the components of the Ukrainian stock market, there's a lot of components that we would have to have in order to have a good taste out of the cooperation with the Ukrainian stock market. I'm not going to deal with this issue of the protection of investors, but there's also a number of other questions that are needed to have the compensation mechanism, the effective infrastructure, the new leverages, the debt, the share, the financial literacy, the simplification of access, and well, simplification of access promotes the attraction of investments, the increase of resilience of the financial institutions, and adequate regulation. The good news is that all of those elements are already mentioned in the strategy for the development of the financial sector, which is wonderful. So there's a certain KPI. I want to get back to the fact that on our way to the EU, we have to have an adequate regulation. Let me give you some examples from the past when the desire of the regulator to impose new requirements to listing, that's from the standpoint of capitalization and free float, and theoretically, in order to increase the number of number of firms that should be joining the public sector. I mean, there has to be simpler than the one of our neighbors. But what the regulator has done, the regulator has made it more strict in comparison to our neighbors, Bulgaria, Croatia, Romania. As the result, the number of Ukrainian companies that were listed on the public platforms, well, has significantly reduced from several hundreds to several dozens. So a lot of companies have disappeared, and that resulted in certain losses among the number of investors. So this is one of the elements. But should we talk about the operating conditions? Now, they are the most important to create a stock market. There's a need for three elements: the corporate standards for business. That's one of the elements. Why the investors were losing the money? Because of the negligent risk management system and negligent corporative management. This element has already been implemented in the banking sector. It's good that the regulator is planning to impose that in the financial sector by the end of the war. That's the second element. So we have to have the reliable regulator, which is independent, which is capable, and that's a question of adopting the draft law, which is currently under consideration, 5865, so that's the number of the draft law. Without that, the development of this sector is impossible. And then local investors, insurance funds, so that any loss of foreign investors, as we have it in the past, the outflow, the capital which is natural, would not result in the destruction of the local market. Now, that's one of the important elements would be to have a law on the pension system. Without long-term money, there wouldn't be no liquidity. So it's like a water for the barge. So these elements for attracting investors are very important. And the task of everyone here is to support the necessary actions, to support the draft law in order to promulgate the conditions for attracting the capital. Thank you. I thank to Grigori for his wonderful speech. I think we should have it before the lunch, because I already come to think of the lunch. Olivier, Till, do you have any comments?
So, is there anything you can say about the current state of the Ukrainian market, in particular of equity, the equity market, both private and public in Ukraine? Maybe not about the current state, but anything about the next steps for it. If no, it's fine, but I just wanted to check with you.
No, thank you for asking. But after the last presentation, I'm hungry. So thanks.
Olivia?
It was quite an exhaustive expansive presentation and quite interesting one.
Thank you. Добре. Тоді рухаємося далі, і ми...
Okay, so we shall move on. We've already touched upon this topic. You've all heard from Grigori this remnant about our EU accession process, and hopefully we shall have it very soon. But still, I would like to ask the speakers to comment on the topic of the EU accession and how this might change the situation with the funding in Ukraine. So that's a kind of a debatable question, because we need to path certain steps, but I think we could consider the following questions, like reinforcement of the regulation and changing the regulatory environment, but still the reinforcement of the competition on the part of the platforms in the neighboring states. So any comments on this topic would be very important. So let's start with our speakers online. Olivier.
The EU accession of Ukraine and how it can impact the Ukrainian capital market in general, the equity market in particular, both private and public.
Yes, on the topic of EU accession, I think it's a very complex and multifaceted issue. And I can only provide a general context that the improvement of the legislation and the regulatory framework aligning to EU standards would obviously be a great plus for international investors who have fiduciary duties. It's very difficult for them to invest money that they may have from third-party investors without having the protection of standards that are recognized by their investors, their own investors. So that would definitely be a positive. Also, I think it's important to focus on stuff like the right of minority shareholders. I think that was said earlier in the presentation. Insider trading laws and so on and so forth. That's more for public markets. But yes, obviously it could be a catalyst for further investments. But I suspect there's a lot of things to do to get this accession. and to convince investors to come in at this stage.
Thank you, Olivia. Teal, anything to add, please?
Just briefly, so my apologies, I haven't had translation for the previous session, so it is a bit like singing in a chorus wearing noise-canceling headphones. So I don't know if what I'm about to say has been said or sung, or if it's off key. But I do think there can be great benefits just in the movement toward EU accession, because it provides a roadmap that investors will understand and that can bring more investors to Ukraine. I think it also provides a roadmap for companies who are seeking funds in Europe to be able to access those funds. As I mentioned before, there is a consolidation of ownership, to some sense, a consolidation of the European stock markets. And I think that for Ukrainian companies to be able to tap those, they have to follow European standards. I think also they need an exit strategy. And so a big part of investing in Ukraine is, well, how then eventually do I get my money out of Ukraine? Not just physically, but is there an option for that Ukrainian firm to seek larger funding elsewhere to take me out? And so I think that's also why it's important to keep moving toward European standards, so that eventually the investors that do come into Ukraine have a larger number of European investors behind them that are willing to take their place in the future. So thank you for the question.
Thank you. Колеги, до вас.
Okay, now, dear colleagues, a question to you. I'll be very concise. I believe the experience of our Eastern European neighbors showed that for many, this period since the beginning of the negotiation process until the actual membership, it was the most important, the most effective for attracting investments. So the perspective of EU accession would serve as a great catalyst for the investors, and I believe that's the kind of the fuel that can boil the borscht. But once again, if you don't have the components, this borscht wouldn't be tasty. So hopefully the fuel will be there, and hopefully on the 8th of November, that will be the start of this negotiation process. But it's important that we serve all the components for the borscht to be tasty. Thank you. Now, Grigori, please. I wanted to point your attention to the fact that whenever we're talking about the EU accession, we're talking about balancing regulatory and legislative requirements. So should we compare those requirements with the level of water, then it should not be kind of freely floating from one market to the other. So balancing of these requirements, it gives the possibility for the water to kind of flow into Ukraine and outflow from Ukraine. To rotate without any borders. Going back to the experience of other countries, the Bulgaria, the Croatia, this balancing, it resulted rather more in the inflow of the capital than the outflow of the local tools. But that's, for the Ukraine, there's a significant need in attracting money. This is something that we need. So a gradual path towards balancing those requirements, towards aligning those requirements with the EU, that will give this water that is very important for our market. Thank you. The next question is the conversation about how to fund the SME, but let's take a broader look. We've already heard that in Europe, there's only 6% of small and medium enterprises that are considering the possibility of having third-party funding. Therefore, talking about the need for the SMEs, to have equity financing. And why are we talking about this? Because for our project and for the economy of Ukraine in general, it's critically important to develop some sort of approaches or channels and the accessibility of funding for SMEs. So, thinking of that and thinking of what we've already heard today, let me just keep SME as a topic, but add another question. We've heard about this 45 days and how it's all been done. And so these are the matters that could be resolved by building certain infrastructure. Maybe they're lacking the CRM system, or that's a question more of a mental nature or of a political nature. So could you please comment on that? And also, let us think together about how we could increase the financing for SMEs, including through direct private and public equity financing. So let's start with those with us in the audience, in the hall, please. Yevhen Grigori, we would like to start with you. I would like to mention the successful program of a state support to agricultural sector. There's some state institutions, but there could be private institutions as well as foundation for partial guarantee of credits in agriculture, the establishment of a register of SME companies in this sector, the availability of the platform that exists in order to gain more information on the programs available. That demonstrates the increase of the number of entities, the increase of the scope of information on the support programs, and that promotes the development or the penetration of these tools. Then we can also see that outside of Ukraine, there's also other governmental agencies and programs that might facilitate the kind of the spread of the programs, because one of the elements it's the transparency for the investor. Secondly, the information on the projects available, and development as one of the possible elements to support the SMEs might widen the number of the companies like that and might facilitate the engagement of other capital tools or leverages. Thank you. I fully agree with my colleague, and let me give you one more example, most recent one. That's a new industry which is currently developed in Ukraine, this mill tech industry, and that they've established a foundation called Brave One, which provides this infrastructure, gives access to the projects. Besides, it contains the assessment and evaluation of the project by the end users, represented by the Ministry of Defense and General Staff, meaning how the end user is interested in that.
This is a huge step ahead for these SME companies, which I'm sure day in and out, we keep having some new companies popping up in Miltech. This is a fascinating segment right now in the economy of Ukraine. And this infrastructure enables us to tap into the basis of potential projects. And the projects themselves gain access to the potential investors. And in this segment, I suppose there will be a lot of interested investors, not only local ones, because we are already seeing some first foreign investors coming and being interested in this segment. That's why I do agree with Grigory that prioritizing some of the fields and sectors and enabling us to create this kind of sector so that we can introduce the players with the investors and vice versa. I mean, this illustration is a very, very important one for the whole country to scale up. Thanks a lot. Really interesting. Olivier and Till.
The current Ukrainian situation, but if you could comment probably from your experience in other countries of the world, what are some ideas from your side about how can we channel financing to SMEs? What are some best practices? Not sure if we really need it to be equity financing, both private and public, right? But still, since this is the topic of our conference, please, I would ask you to comment on that as well. Who'd like to go first? Okay, Olivier, please go ahead.
Thank you. No, I think I'm less familiar with the initiatives, obviously, that have been explained here. On our side, in terms of SME financing, I think we committed to a fund that was created last year for 40 million euro. I think the fund itself is now 250, and we contributed the inception for the funding of SME. We have launched initiative for startups. It's not a financing per se, but it's really to help at the startup scene, which is quite important for long-term development. And Ukraine has obviously a talented workforce in that area. Startup Wise Guy, which is open to Ukraine very recently. I think it was in October this year. So I think we all see that SME financing is a long-term and important topic. But that's what I can mention in terms of the actions that we currently take to help.
Thank you very much.
Just briefly, I think in terms of bringing in foreign capital, one of the topics that the financial sector reform program has been working on is political risk insurance, and the importance of that in the current conditions. And I think if you look at the availability of that insurance and FDI flow in Ukraine, you're going to find a very close relationship between those two. I think in other markets in the state, as mentioned, private equity. Private equity is a good way to open up investors' eyes in terms of the opportunity. And I think many times the best way is to pair private equity with local debt financing or local equity financing in order to grow the pool and use it as a way to leverage domestic financing, or the other way around. And so one way to do that, as Olivier mentioned, is the creation of funds, and having those funds working closely with commercial finance, which will continue to dominate SME finance for some time, I think is an important way to go. And then if you look at what some of the other markets have done when they're trying to build both the pools of investment as well as the access to those pools for SMEs, it's also using the use of government guarantees and government investments. So governments have often been passive investors in funds that have invested in SMEs, and I emphasize the word passive, in that you don't want government choosing which SMEs get equity financing and which ones don't. But providing some public support to some of those funds is a path that some countries have gone down, including venture funds. Israel is a good example of that, where they helped create a venture fund industry to some degree through a combination of public-private investment. And then the other is guarantees. I think Ukraine has made copious use of guarantees in commercial finance. And I think if the guarantees are to continue, it would be interesting to also look at how some of those guarantees could be applied to equity finance through funds and other instruments. Because I do think finding a way to protect investors against that downside risk, while at the same time linking private investment to commercial financing, may be one way to try to reach scale.
Thank you very much. Будь
There was another part of the question which addressed my part of the presentation, and I was hoping you would talk about it, but I would like to comment on that anyway. I suppose that there are two very important decisions that need to be taken. First, it's realization that being aware of the fact that being able to sell, it's a separate skill, and fantastic lawyers very seldom can become fantastic sellers. So fantastic public servants cannot become necessarily fantastic sellers. So we have to somehow build and hone the skill, or we have to revert to the idea to engage investment bankers, in particular for big deals, the people who have been selling throughout all of their lives in order to run road shows and create this interest and then run very interesting bids. This is the first thing. And the second story I have mentioned, one needs to realize that the government as a seller needs to become a reliable and responsible seller, and they have to become responsible for the time of their tenure and try not to make sure that the buyer will be responsible for the previous term, and say that if there are any problems with running this asset, please turn to us and we will be sorting these problems out with the previous owners, with the supervisory boards of these facilities, if any problems should occur. But not try to just leave new investors with the problems that can unfortunately ensue. Thank you very much. It's most interesting. Now would like us to hear the questions from the audience. Let's start our Q&A. Perhaps if we have any questions online. So Yulia, please. Thank you. Good morning. Yulia Vitka, USAID, reforming financial sector reform activity. Thank you very much for most interesting, substantive presentations. I totally agree with everything that has been said. Fantastic presentation by Yevgen. I have already written down the slogan that we have to overpower fear for the future investments in our sectors in order to continue the recovery of post-war Ukraine. For the interagency task force, could you kindly tell us who we have to report this information to? Why you, so highly venerable experts, are not part of this task force, sitting and discussing it together at a negotiations table with the government? Why are you not sitting with them, putting your heads together? Because you have such a great deal of expertise, this experience, this background knowledge. Why is this work not starting now? Because we understand that this war is going to continue a long time, and we cannot just sit idle waiting for this recovery to drop on our heads. Therefore, this is a kind of an emotional question. Where should we go? Who should we reach out to? And what should we do to make sure that the government listens to us, the donor, because the donor is standing ready to help? This is question one. And the second question also goes to Evgen and Yegori. What is your attitude to development finance institution establishment in Ukraine? How soon do you think it can be established in order to assume this role concerning some blended tools where private equity could somehow merge with some donor guarantees? So thank you. These are my two questions. First off, let me tell you that at the level of private institutions, this work has already commenced. And probably all of us have an example to share. These possibilities of iterations between private and foreign enterprises and entities at some linear levels, perhaps, but this work is being done by associations. And a good example here could be the Ukrainian Association of Investment Business, which at the level of association is trying to establish a particular platform to swap and exchange information. But understandably, governmental support, which is invaluable, will definitely provide us a greater deal of confidence, more opportunities for the development of such programs in a broader sense. No doubt, creating different institutions like crediting ones, and we have already seen some arising in Ukraine, which enables us also to expand the circle of the interested parties. This is something that goes with reference to your first question, what's going on right now. So some of the first steps are being taken. Perhaps my colleague will add. I will try to be frank with you concerning question one. Why we are not sitting at this negotiations table. I think Grigori is right. We are representatives of private businesses. We do all we can in terms of communication with the pool of investors that we are busy dealing with. And if the government is interested in involving, engaging our experience, or hearing our opinion, we are always open. But we would like to see efficient tools at the disposal of the state. We are not used to talking for the sake of talking, but we are always open for engaging in some effective platforms that will be operational. For that, different investment boards have been established under the presidential office. There are some very cool CEOs from big companies or large investment funds present. Unfortunately, I may not have heard, but I haven't seen at least any actual results, any deliverables of just getting together for that sake. If we do that for the sake of PR, we have a lot of other activities to be busy with, but just getting together for the sake of changing things for real, yes, we are always ready to stand by such projects. Dear colleagues, both online or in this audience, do you have anything to say concerning question 2? Do you have anything to say? Whether it makes sense to establish a Ukrainian development bank? Till, Olivier, what's your take?
No, I'll let it go, but thank you.
Anything from you, Olivier?
No, sorry, I cannot comment on the development bank. We try to be active ourselves, but I think there's quite a few of our peers also in the funds that we were mentioning. And but yes, right now, financing from public sector is probably crucial because in current situations, that's the largest pool of available capital to be deployed.
Thank you. Ну, рухаємося далі тоді.
Okay, let's keep moving. There was a question. Hello, my name is Sergei Moskvin. I'm a member of the civil society Ukraine EU platform, and tomorrow we are going to have a meeting of the both Ukrainian and European parties, representatives coming to Kyiv. So I would like to ask you what regards from behalf of the financial sector do you have to the European party, to the European end of this deal? What does the financial sector want to see in the activities, in the future activities of the European Parliament, European Commission, all of the EU bodies on the way to the Ukraine's accession to the EU? I don't want to go into theory because we already have a plan. For example, when we talk about the financial sector, there is already a plan, synchronization, alignment, approximation of the Ukrainian legislation in line with the European legislation. In this respect, I can only wish, and my regard is concerning the requirements that we have here in Ukraine and the requirements that the Europeans have to articulate more clearly for the public, for the financial sector, both the wishes of the European environment and our wishes, the wishes of the national business. But let me just give you one of the latest examples that has been talked about concerning PEPs. And we can see that the public does not understand some of the legislative requirements that have to be complied with on this way of accession, which unfortunately leads to misunderstanding and internal conflicts and lack of rejection of certain elements that are necessary to synchronize our respective legislations. So when we talk about these multiple groups, the main wish on behalf of the financial sector or representatives of any other sectors is to make sure that you have clear-cut messages concerning what needs to be done when, which ones are mandatory, and which ones are not mandatory as requirements, so that on the eve of approving such legal acts, we are already well prepared and aware of how these things are going to be enacted. Thank you very much. Any more questions? Yes, Taras, please. Hello, Taras Aleiko. Thank you very much indeed for engaging in this very interesting discussion, because we have already broached different interesting points. So the questions go to Evgeny and Grigory. My first comment, right now the government in terms of attracting investment is going to become the biggest player. That's true. And then a small comment concerning the government. In terms of privatization, virtual rooms of data and the circle of players has already expanded substantially over the last 3 to 4 years. But my question is beyond that. Can you name 3 incentives that the government needs to establish so that the foreign investors step into Ukraine? And you are very correct when you said the government needs to be held accountable for the previous periods of running property. This was an initiative suggested. Unfortunately, it was rejected. So the 3 incentives that the government needs to assume, and the 3 steps, and the 3 risks, major risks in connection with that, given the confiscated or frozen assets, because we understand that a lot of these assets can also be fraught with a lot of problems or issues. Thank you. Let me focus on this incentive in particular. There are numerous examples that can be cited. We can take OPZ, it's probably one of the Ukrainian enterprises, and the debt. So once again, this is the issue of the responsibility of the government. If a particular asset costs 100 million and it has 0 debt, then it costs 100 million. But if it has 100 million debt, then it costs nothing. And nothing changes for the state. So they shouldn't be afraid to assume this responsibility for the debt. If a debt is recognized to be a debt, then it levels out into a 0. It's a fact. And if this is the maxim working today, then we would have this Ukrainian entity working for many years, creating jobs, paying taxes to the treasury, and of course it would be contributing to the GDP because it's a big enterprise. Concerning rooms of data, well, sometimes they are established, sometimes not, but the quality of the information in these data rooms, unfortunately, still desires a lot. Leaves a lot to desire. So there's a lot of room for improvement. So the first thing that I caught myself thinking about is the deadlines. Within the deadlines established, when bidding procedures have to take place, it's impossible for foreign investor to be able to take the proper decision. It doesn't work that way. Cannot be figured out in a month. Building a model and then defending this at an investment committee and then participating in this procedure. I mean, this pre-sale period, at least for big assets, has to be increased. These deadlines have to be extended and professionals have to be involved in these procedures. And I suppose that in terms of involvement of these specialists and extending these deadlines, this will definitely be awesome and cool if the government agrees to spend time and money towards that. Secondly, concerning the accountability, we have spoken about that. And point 3, the withdrawn assets, frozen assets. I'm sure there is this temptation in place not to sell them for a long time because there are still some controversies around them. But still, these claims and controversies and gripes of the previous owners, the government immediately assumes them once it confiscates these assets. So if they turn to the court concerning withdrawing a particular asset, it means that the government automatically becomes a risk taker in the, and this is not something that another buyer has to assume as a risk. The government needs to be responsible for everything that it does during the time it operates these assets. Yes, it's risky, but I don't think that sharing these risks with someone who cannot be quantified will eventually result in the fact that the value will end up in 0. And this will be zero revenue to the government treasury from such privatization.
Grigory, would you like to add something? I definitely agree with the need for transparency and responsibility. As for the risks, the major risk under our conditions, that's military political risk. And this risk, or any other risk, after we start working with that, we can see some solutions and some decisions. And just recently, and we have to express words of gratitude to your side for supporting this initiative, we saw this. The topic of military political risks, it was a very complicated topic, and it was unclear whether we would be able to cope with that. But when we started working, we saw some movements, some possible solutions, and the spread of certain elements of the protection of these risks. And going back to those challenging issues mentioned, when the state and the SME sector is very important for the state. So when the state starts to paying attention to that, when the state starts creating programs to support the SMEs, then we can see some kind of clear solutions. So a question is that today we have already identified certain areas for work in this sector. Now, theoretically, if we'll start to make certain steps, then we'll get some results. I thank you. Now, dear colleagues, we're supposed to finish according to the schedule, but since we started later, let's have two questions that I can see from the audience. Alexander Panchenko, thank you for these insightful briefings. It was very interesting to listen to the point of the financial institutions. Surely there are some accumulated challenges, but it's interesting to look kind of ahead, talking about the new capital, the new firms that might be willing to draw equity financing in a form of IPO or in any other form, like you as the financial institution. So my question to Dragon, to ICU, to EBRD, under which financial indicators would you agree to have equity financing for that firm? And the second question for the reforms. We all know that there's a cannabis reform in Ukraine, and in the United States, in Canada, it resulted in IPO boom for companies like that. Do you think we'll have something like that in Ukraine? Could you once again, could you mention the second question so that we'll cover both of those questions at once? Good afternoon. My name is Volodymyr Monastersky, the international law firm Dentons. We are rightly talking about the establishment of infrastructure for capital, law, economy, demographics. That's all important, that's all clear. But we have a war in the country. So we can create this infrastructure, but the car won't move because it's, someone was planning to have a barbecue on the weekend, but then the war started, and then we have an infrastructure, but we have no people. I'm a lawyer, and the legal advice is usually secondary after the business, because the business takes the decisions to invest or not to invest. And the business primarily takes those decisions based on the advices, including the advices of the financial analytics. So I have a question to representatives of Dragon Capital and ICU, because they're private sort of parties, not the public ones. Under which conditions would you recommend your customers to invest in the Gaza Strip? And if those indicators would be there, we'd understand that whether the private investors would be coming or not coming to Ukraine while we have a war. I believe your question seems to be like the first question: which financial, political, and military conditions could you kind of draw those conditions? How the company needs to look like in order to be interesting for you? And the same question to our online speakers. We would like to hear your point. And the second question was regarding the cannabis sector and its potential. So, dear colleagues, let's start with you. Yevgen, please. I think it would be more difficult for me to answer the first question because we have a Chinese wall with some of the other departments. I'm talking about the investment of our own funds because we are ready to invest in companies that are showing progress, as well as in companies that are in a special situation, but still, like 2 years ago, they were far more stable and far big. And currently, we are considering new cases at the investment committee, so we're ready for that. So that's a partial answer to the question about the Gaza Strip. Our willingness to invest our own money, that's even better than our agreement to kind of, to recommend this. And, I won't be able to answer you about the Gaza Strip, but we are ready to invest into Ukraine with our own funds. I think that's the best answer to the question that you've raised. As for the cannabis sector, I do not believe in the legalization for political motives. I think that it's too early to think whether it's prospective or not, particularly for the EU. There's one Ukrainian firm or entrepreneur who invested in that field in Portugal, but in my understanding, it's not working very well because there's several regulations and it's hard to get access to the end user. But still, I can't think of a political decision to be made on legalizing cannabis today. So the first question was about the new directions for the investments. There's many of them. I'm not willing to kind of limit ourselves only with cannabis. We can see some stable trends. There's kind of demand, the scale of investment. So this is the trend. If it's inevitable, it will result in the increase of the investments. That's kind of a question whether we do have prospects for that. So the second question was whether we promote investments in certain sectors. So let's remember this example with the green electricity. So we give answer to the great and fear that was before the attraction of the foreign investments into this sector. So what have we faced up with in the end was kind of unstable or unclear, or to some of the investors' mind, a kind of unfair regulatory framework and the requirements that changed swiftly. So what the investors want, they want to have some horizon, some investment horizon and certain rules to stay put during this horizon. If this is not available, then that intimidates the investors. So unfortunately, we have multiple cases when the rules of the game have changed after attracting those investments. So a favorable kind of a request would be to have the regulatory framework remaining unchanged for 3 to 5 years. So this is something that investors would like to have. They would like to have some clarity, some understanding. Now, the last, we saw that simplifying certain elements that were mentioned on this slide with the Bourse, they increase naturally the interest of the investors. This digitalization element, it simplifies access to the market for the local investors. using these apps have significantly increased the amount of investors investing in some of the sectors. Or just before the war, we could see that simplifying access of foreign investors to the local debt market has also significantly increased the amount of interested investors. So the question is all about this small infrastructural components that will eradicate some of the obstacles in cooperation with local and foreign investors. I thank you. Olivier Till,
There was a question, what should be the parameters for a company that you would be interested to invest in and possibly even lead others to invest into that company? Olivier?
We have already invested, as I mentioned, in some private equity fund. In terms of specific investment criteria, I don't want to go into detail because it's really case by case basis. But generally, or as a development bank, or the criteria are obviously not only for equity, but I think for any lending or any guarantee. It needs to the return needs to be commensurate with the risk as a normal investor. We call it, say, sound banking principle. The second is the additionality. So we try to help sectors and companies where that are not necessarily well addressed by the private market generally. And the third one is the transition impact, is how we try to improve not only grow the company, but also improve its corporate governance and the sustainability. That's basically the three guiding principles, which are not specific to Ukraine, but are generally for our investments. But obviously, the devil is always in the details. So I don't think have a magic formula to provide.
Thank you very much. Till, anything to add?
No, just that we have a great panel to discuss that in about an hour's time. So I look forward to learning from them.
Thank you very much. Отже, я дякую аудиторії.
I thank the audiences, thank to our speakers, both online and offline. And we shall start the new presentation in just a second without a break. So we'll have a small photo and then we'll start the new break. Dear guests, please stay with us. We will have the next presentation right away. And please return for the... we would like to ask Ihor Chufarov to return after the presentation for the photo. So we have Ihor Chufarov, the partner of EY. Ihor will have a presentation on the roadmap for the implementation of investment accounts into Ukraine. He's an expert in international corporate tax, transfer pricing, and corporate restructuring. And Ihor, together with his colleagues and experts of USAID on reforming of the financial sector, he participated in drafting the law 8111 on the implementation of short-term and long-term investment accounts. So we'll have some information on this tool, on its implementation. We'll have a separate presentation by Ihor. Ihor, can you hear us? Yes, good afternoon. I can hear you. Can you hear me? Yes. I'm trying to show the presentation. Yes, we can see the presentation now. Good. So, greetings, everyone. My name is Ihor Chufarov. I'm the partner of the Ernst & Young company for over 20 years. I've been dealing with taxation of the financial transactions of the stock market, of international tax. And today I would like to tell you about this new interesting tool for tax incentives to the investments in the stock market, and it's called individual investment accounts. We've been working on this tool together with the other company under the USAID project, and we had some support from the other entities, and there's the result. We've drafted the draft law 8111 on the implementation of the investment accounts. So what are those individual investment accounts? I believe everyone knows that there's two major ways for investing into the stock market. It could be collective investments or individual investments. In case of collective investments, the investor invests money into professional entities like corporate funds, which are managed by the professional asset management companies. And when they receive the money, they're investing them into different shareholders, stocks or whatsoever, and shares in stocks. Currently, the Ukraine provides tax incentives for the collective investments. Any transactions of the funds, they are free from taxes. So the fund is buying certain assets, selling certain assets, gets the dividends, gets the other returns. So as long as all this money are in the fund, are invested into the new assets, and the returns are keep coming, all of this operation, all of this returns are free from taxation. Now, it's only when the investors will decide to take the dividends out of the fund or in the form of the return of shares or certificates of the fund. Now, in that case, this kind of income that they will receive in future, there will be some tax imposed. But as long as the money are working in the fund, there is no taxation. The state offers this tax benefits, and these conditions have been implemented long ago. As for the individual investment, now we don't have any benefits. So how the person may have this individual investment? It might have start an account in securities, and it will take a decision on investing certain assets. It might buy, sell certain assets, receive the dividends and incomes based on this operation. But every operation is currently subject to taxation. So despite the fact that this person might be willing to continue the investment activity, it's not like willing to withdraw the money from the investment activity, but still this money, this income would still be subject to taxation. So what does that mean? So for the investors, there's no particular kind of tax benefit. There's no particular incentive to keep the money in those accounts, whether this money would be stored for several days or several years. The taxation would be the same. So there's no incentives for the long-term investment. In our draft law, it should be changing that. It offers the individual investment accounts that offer certain benefits. So we use the concept of the investment account that is working in many of the developed countries of the world.
So very briefly now, I'm going to share with you about some international experience in this respect, pertinent to that, about similar tools available in other countries. And then we'll talk about the main provisions of the draft law which are about to be made into a reality. So there are different types of such investment accounts worldwide, and the major ones are two. So they are pension and non-pension account types. Pension ones, it means that the money stays there until the investor reaches a retirement age. So this is a very long-term instrument. Once you deposit money there, the investor cannot withdraw any revenue or withdraw the money from this account until he or she retires. Non-pension types are the ones which are open for a certain while. This is always to do with some midterm and long-term periods. However, there is no formal requirement put forward that you will have to wait and wait until you retire. So money can be withdrawn from these accounts much earlier. So right now we are focusing on non-pension type accounts because we are going to have a special legislation, and it's much more important and pertinent task for us to work on is to work on non-pension type accounts. Talking about figures, they're really astounding. Some of the resources involved in the economies with the help of such tools. In America, there are more than 50 million individual investment accounts where more than $11 trillion are deposited. In the United Kingdom, there are 12 million accounts where there are 600 million pounds deposited. In Japan, this amount is 170 billion US dollars. In Canada, $228 million. All of this money has been attracted from individual citizens. These are individual accounts. We're not talking about collective investments. So these are average citizens operating in the stock market, money which is circulating in the economy, and respectively, the attraction of this money. And this is about the fact that there are a lot of tax breaks, tax benefits involved with that, the possibility for people to earn some interest, and that this interest is tax-free. So this was a very important element to accumulate these huge amounts of money, which is functioning for the sake of the country's economies. When talking about benefits and breaks, so what is exactly provided to the investors who want to open up such individual accounts? Basically, there are two main types of benefits. The first one is the possibility to deposit money in these accounts with the money that hasn't been taxed yet. You know that when you are paid your salary, the employer immediately has to pay taxes on the payroll. There are also military duties to be paid. So it's about 19.5% that the employer has to pay. So that means that out of 100 hryvnias, 80.5 hryvnias will be payable. The rest of the money will go to the government treasury. So these non-pension accounts enable the employer or enable you to deposit this 19.5% to be saved. As a rule, this benefit, which is provided on pension funds, because it's a very long-term type of investment, and the taxation effect on the government, because in fact, in Ukraine, they like to speak about losses to the government budget. So this happens immediately at the time when the money is deposited, because when revenue is paid out of these accounts, the government will be losing 19.5%, which otherwise in a very long, distant future could work in favor of the Ukrainian budget. In our draft law, we are not writing for this benefit, because this would be substantial losses to the government coffer. Therefore, we have rather concentrated on the second type of benefits. The second type is provided it's freeing the income or exempting the income which is accumulated on these accounts. So this money is exempt, tax exempt. So if you deposit this money in this account, this money doesn't need to be isn't taxed. And next, when operations and transactions go according to this account, if you receive a particular income as a result of this deposit, money is accumulated, money, and all of this income accrued, interest and dividends accumulated in this account, once again, is not tax payable. So this is another benefit which is going to be provided for in our draft law. The circle of assets that becomes part of this scheme. In the majority of countries, you can buy anything which circulates in the stock exchanges, and sometimes even some extra stock exchange instruments like real estate is also goes. So we decided that the regulator will determine the scope of assets, that the investor will have an opportunity to invest in with the help of these investment markets. Another very important element in the international regulation in running such investment accounts. In the majority of developed countries, these are restrictions for annual contributions, maximum annual contributions. Why are these restrictions imposed? In order not to abuse these instruments, particularly wealthy investors, so that they can use that as a pool of their investments and hide and avoid paying taxes. So this is an instrument for average investors, the so-called average class of the society, the middle class of society. So these people will be able to, at least they provide for that, that a particular amount of money will be set aside in these accounts out of the people's savings or people's salaries. In the United Kingdom, people can save up to £20,000 with these kinds of accounts. So this is a sizable amount indeed. Concerning our draft law 8111, the provisions set out in it. In summary, it pursues incentivizing long-term and mid-term economic activities of the government, of the citizens of Ukraine, and making sure that we can create the necessary conditions to flow for the money flows, the so-called long money flows into the Ukrainian economy. We don't see reasons why this instrument cannot be made functional even now without having to wait to post-war recovery, because there are lots of plentiful opportunities available during martial law. So there are two types of accounts that can be opened, mid-term and long-term accounts. Mid-term accounts are to be opened for 3 years, so this is a very limited period of time for investment. And in these types of investments and accounts, decisions have been taken concerning introducing maximum lines of investment so that very wealthy individuals, loaded individuals, cannot abuse these accounts in order to avoid taxation. So there is a particular limitation to the amount that can be deposited. So in the concept of this draft law, it says that the minimum should be 300 minimum salaries. So this is about 2 million hryvnias as of now. It's impossible to deposit any more money without losing your tax benefits. And another type of accounts is a long-term deposit, which is opened for at least 7 years. And here the decision was taken not to introduce any limits. Why not? We have calculated that if someone agrees to deposit in these accounts and to keep their money in these accounts for 7 years to make sure that this money is functional and operational in the economy of Ukraine, it makes no sense to slap restrictions on the intentions of such investors. On the contrary, they have to be even more incentivized and encouraged. Therefore, we decided not to impose any caps, top caps. So you open this account just like any other account. There are also brokerage and sub-brokerage activities provided for, depository activities in deposit institutions. Certain obligations will be left with some investment companies, and they will have to send certain reporting to tax inspections so that they can once again see whether or not the tax exemptions are regulated and are applied properly. So every individual has a right to open one midterm and one long-term accounts. So we do not provide for the opportunity to open multiple midterm and long-term accounts. Other investment companies or other investment makers, if, for example, one investment company terminates its activities, so the account is transferable to another investment institution that will be running this account. Concerning how the account itself will operate and the tax benefit that will be implemented based on it, just as I have shared, money can be deposited only out of the taxed money. So at the time when you invest the money, there is no possibility to reduce the tax base to the amount of the deposit itself. So you, as an individual, receive a particular income which is already taxed. This may be your payroll, this may be some other kinds of financial activities or any other kinds of revenues or income as a private entity, as a physical individual. And then there is a break or a benefit provided for the income of the transactions that will be exercised within the framework of this particular account, whether it be midterm or long-term. As I said, 3 and 7 years respectively. So everything that will be earned with the help of this investment, all of the interest, all of the rates, everything will be exempt from taxation and military duty. The draft law means that the respective individual will have a possibility to withdraw a particular amount of money, up to 10% of the overall deposit amount, just in case, to make sure that the investor doesn't get bothered, that if anything wrong happens to him or her, they will not have any money at all, that the money will remain frozen. So the possibility to withdraw a particular amount of money for pressing needs will be available for the investor. And as we said, so it shouldn't exceed 10% of the overall amounts of deposits. And another important thing, the investment company that will open such an account will be an additional guarantor. So if there are any violations of the deposits, and if money does not stay within this account during the 3 and 7 years period, respectively, the investment firm will be held accountable for that. So the physical person or entity will not have to do anything, but the investment company will be responsible. So for the investors, this is a really handy approach, comfy and handy, to make sure that they do not have any complications and difficulties in terms of administering their taxes, in terms of paying taxes, submitting tax declarations, because most of the investors are scared to have to perform such duties. So they will not have to report about anything or submit any reporting documentation. because the investment company or firm will be responsible for that. But once there are violations or breaches in the operations of these accounts, if more money gets withdrawn from the accounts, then the investment company responsible for that will have to pay for the taxes, pay the taxes that the government will say it is liable to pay. So this is just a proposal for the average investor in Ukraine to open these accounts, to deposit the money for the particular periods of time, midterm, long-term, invest in the stock market, and the government in return will exempt you from having to pay taxes, additional regulations, compliance with regard to the revenue that you will be able to earn. So we believe this is a significant instrument that needs to incentivize, is supposed to incentivize average investors and make them interested in coming to this market. That's it as far as the concept itself goes. Perhaps our attendees have any questions. I will be happy to take your questions. Thank you very much. Mr. Igor, do you have any questions, please? Hello, my name is Oleg Zagnitka, the Integrity's legal firm representative. Do you believe that these accounts can also become subject of securities because the owners may have other needs for getting bank loans? So do you think that somehow they can interact? Concerning the civil legal mode, this draft law is not going to introduce any amendments in this respective regulation. This particular physical accounts, all of the assets will belong to the physical person, the owner. So it's impossible to apply these assets as securities or obligations, at least in the draft law text. However, if this security will have to be withdrawn by some kind of court decisions, so this may entail some tax effects as a result in the form of military duty or levy payable or additional tax that will be withdrawn from the whole account. Hello? My name is Leonid Belozersky, Sensbank. I have a question about the direct mechanism of investment in venture business or sectoral funds. As of now, we are restricted, legally restricted, to invest in corporate investment funds. The number of particular minimal salaries is established. So you have spoken about 2 million hryvnias. And if we trace your logic, then probably it would be expedient to cancel this benchmark, because as an investor, I would like to invest in something larger, a larger profile, a fund, something which is not present on the stock exchange for different objective reasons as a result of business corporatization. So do you have any ideas regarding this? What is your reflection on that? And how quickly do you think this draft law will be enacted? Thank you. Let me start from the end concerning the prospects of approving this draft law. Probably this has to be addressed to the parliamentarians, the MPs of Ukraine, because while working on this draft law, we felt that all of the members of the working group, the Commission of the Securities, the venerable MPs, they said that we shouldn't have put any delays on that because they believe that this was an extremely relevant tool for Ukraine. However, right now I don't know any deadline, so I cannot answer directly. Concerning the possibility to invest by individual investors into the institutes of mutual funding, this draft law is kind of different. It works differently. It takes care of individual investment accounts, but it does not preclude the investor from exercising investments into different tools, variety of tools, including mutual or collective funds, collective instruments. I suppose that this question should be addressed to the regulator, what the regulator will allow to invest in, because like I said, the regulator is supposed to determine and identify the range of assets that the investor will be able to invest in from these accounts, and the regulator will have to establish that. So I suppose that this is something that probably should be addressed also to you as the members of the market, to lobby this to the regulator, to make sure that this toolkit is as wide as possible, perhaps even amending the necessary legislation concerning the Commission of Securities that would also enable certain investors to invest in different kinds of funds.
Okay, any other questions? Tatiana Salnikova, the All-Ukrainian Administrator of the Pension Funds. I have a number of questions. First, have you made any assessments or evaluations what would be the penetration of this service? You've mentioned that for United States, there's 15% of the people having accounts like that. In other countries, there's 9% of the people. So have you made any assumptions, like how many or what would be the demand for this service? And second question, have I understood correctly, in case of a premature withdrawal of the fund, there will be a double taxation of the returns of the incomes of the person? And the third, about the declaration, your draft law, does that provide the introduction of amendments to the tax code that you won't be necessary to submit tax declaration? Because now when the person gets the investment incomes, and even if the investment company is paying the taxes and reporting, still the person would have to submit additional declaration at the end of the financial year. So thank you for your questions. I'll start with the last one. Indeed, the tax code of Ukraine provides that for the declaration to be submitted by the investor. So we shall be introducing amendments into this provision, primarily as related to the individual investment accounts. So if the payments for the physical entity shall be provided by the investment company that would serve all the functions of the tax agent. Now, in this case, that physical person will not be providing a declaration. That's to reduce the amount of kind of papers. So the investors would understand that they would not need to tackle with all those complicated issues like filling in the declaration in order not to kind of frighten them about using this tool. As for the withdrawal of funds for this account, or taxation or not taxation. So if the investor withdraws up to 10% of the costs, there's no taxation. We believe there's a certain need, because any person, any investor might have some, emergent needs for the money. So withdrawing a small amount of money from the account shall not be considered as something that is subject to taxation. But if the withdrawal is or more than 10%, then the tax would be implied to the amount of profit. So only the profit shall be taxable. So the amount that is that is the original capital of the investor, that is not subject to taxation, and surely the investor can withdraw this amount of money without subject to any taxation. So only profit is subject to taxation. And if you've invested 100 hryvnia, and so you can take this 100 hryvnia, you shouldn't be paying taxes out of that. So the first question that you've said, could you please repeat this first question? Yeah, it's not always to have an answer to the last question first. Have you made any assumptions? What would be the penetration of this service? Oh, yeah, okay. We're expecting a fairly wide penetration, I would say, because the popularity of certain investment tools with simplified access for the investors is fairly significant. One of the panelists mentioned one thing, that the access is something that is very important, and state bonds, well, this is something that any person can buy in any bank without any additional formalities, and that resulted in a significant inflow of the resources in that tool. So we will show the signal to the investors that they might be using the apps by opening the investment account in certain bank. They might be investing in a wide variety of tools without the need for doing some tax registration, submitting declarations, and things like that, and they will be exempt of that. uh, and they will so this will be done by the bank or the investment company. I believe that this mechanism would be fairly popular, particularly if it's going to be used online. Thank you. Ihor, any other questions? We have one more question. Yevhen Dubagres from USAID. Thank you for your answers. Thank you for the presentation. I have the following presentation. How do you guarantee the investments of the entities? So there is the guarantee for the deposits, but for example, if the financial institution is leaving the market or is becoming insolvable, or if the money are being taken through risky operations, so do you guarantee this amount of money, the investments, to the investors? If not, what has to be done in order to have some sort of a guarantee? Okay, so this draft law doesn't change anything in the system of guaranteeing of the investment of the investments. So these tools that are provided to investors, they will be just the same as for the others. We know that many countries of the world, they have a system to guarantee the investments. There's limits, there's the guarantee funds, but I would say that's a more large-scale task, and it would be hard to solve through this draft law. So this draft law introduces a very specific investment tool. That's the scope of that. Thank you, Ihor. Thank you for the interesting presentation. Now that concludes this panel. We shall have a coffee break, and you can kind of discuss what you've heard, and we'll get back at 12:20. We'll have another So let us start with identifying the situation in Europe, because we know that the volume of direct investments into the companies of Central and Eastern Europe in 2022 reached 3 billion euros, and it was primarily focused around the countries like Czech Republic, Estonia, Poland, and Croatia. Estonia is the leader not only for the Central and Eastern Europe, and it has 1.3% of GDP, equal of direct private investments. In Ukraine has a fairly more modest indicators if compared to the European countries, but still it points to an increase in understanding the importance of private equity capital for the motivation of the SME. So we'll be talking about the trends in the investment of the SME. So let me invite Julia Wittke, Deputy Chief of Party, USAID Financial Sector Reform Activity, as be our moderator, and our speakers who will share their experience. Roman Cheripaha, Investment Director from Horizon Capital. So please, then Yevgen Reznichenko, Investment Director of Dragon Capital. Scott Reachers, Managing Director, Head of Eastern Europe Advisory Board from Crossboundary. Then we have Serhiy Pozniak, founder of Finstream and Kronvest companies, Chairman of the Association of Veteran Entrepreneurs, Junior Lieutenant of National Guard of Ukraine. And we also have Irina Jus, the Director of Soul Partners. So I wish you all to have a constructive conversation. So good afternoon, everyone. We're happy to welcome you at our event. And the second part of our session will be dedicated to some case studies on equity financing and the equity of SMEs. During the first part of our session, we had about challenges of equity financing, the challenges of the enabling environment, the supremacy of the law, the protection of the rights, the importance of attracting foreign direct investments, as well as maybe some additional incentives like ensuring military political risks or the guarantees that might facilitate this. During the second part, we'll be talking about more practical experience, but still we'll be focusing on the future, what can be done, because this period, this momentum, this is something that we need to use. A lot of funds for investing SMEs are provided by the donors. The debt financing market through the banks primarily, it's working, it's developed, it's pretty much clear. But as for the equity financing market, it's not that developed. So should we take a look that the financing of the SMEs is done primarily through the 579 program, the program of state guarantees. Hopefully we'll have some additional mechanisms like a fund for partial guaranteeing of debts for agriculture or for loans for agriculture. But unfortunately, this is going to be all for the funding because the market of corporate bonds, this is something that is not exist. And talking about well, something is happening. So today we'll be able to listen to different practical examples. There's different companies, as we have a lot of people representing practical experience and know-how in this area. So we'll start in the proceedings as we have it in the program, because we'll have some presentations, and later on we'll have a more interactive conversation with the representatives. So let me pass the floor to Roman Cheripaha from Horizon Capital. That's one of the leading firms and private investment companies. So if there is any experience, then surely Horizon Capital will have it, because during the war, Horizon Capital remained very active. So let us hear what's the change of situation as the result of the war, and any practical cases you can come up with. So thank you. Good afternoon, everyone. Thank you for the introduction. And let me tell you today a couple of words about us and what we are doing, but one of our cases. So, on the overall, when we are trying to meet new people, new audience, what's important to tell about us is that we are one of the oldest investment companies working in Ukraine and in this region. We've been working for 29 years. And over that period of time, we've managed to back over 170 companies. And we've managed to acquire 1.5 billion US dollars under AUMs. That's in 6 funds. And we've used this capital, and which is provided by a very significant investor base from UK and European institutional investors. So on the total, they have around 630 billion US dollars in capital that they're investing around the world. In this context, it's important to mention that even during the war, we continue to operate actively, and we've managed to engage one more fund for the total amount of 298 million US dollars. And we've already started to use this fund for making investments. So the announcement on the new clause was made in September this year. Now, should we take a look at the change in our approach to investments, I would say that we started as like classic Western brick and mortar fund. And over this 29 years of our operation, we've invested into a wide variety of businesses, and you can see some of the examples that we've considered: consumer goods, manufacturing, finance. But since the beginning of the war, since 2014, our focus started to shift more towards the IT and technologies, and partially towards the consumer goods that are based on the use of technologies. So, what is rising now? That's primarily all about the top rectangle, which includes the technological companies. And I'm going to tell you more about one of them, more specifically the company called Leaky24. Why Leaky? Because this is one of the smallest companies that we've ever invested. This is the company that has received our investments in 2020. It was during the major crisis when there was a significant uncertainty in Ukraine. This company, in addition to being a very significant driver of changes in its own sector in Ukraine and in Europe, it also has a very important social function. It helps to counter the consequences of the COVID-19 pandemics. It helps to supply drugs and medicines to those regions which do not have them. And it helps the social, it helps certain people who wouldn't be able to receive those drugs and medicines if not for this company. So Leaky24 itself, 3 major challenges. First, they help to find the drugs or medicines at a cheaper price than it is available in the market. They're monitoring a database of prices. They can see the differences on the market. Secondly, they allow to collect all the kind of orders in one place. and later on they allow you to select a place for receiving those orders, so you wouldn't need to run around many locations or multiple locations if you have a large order. And third, it's the convenience, because it's very easy to use servers. And currently, the company is working in 3 countries. It works in Ukraine. Well, that was the first country that it launched its operations into. Then in Romania and Italy. Why have I decided to tell you about the, well, drugs and medicines? Because it wasn't a standard case for us. It was a company that we've invested less than we usually do. It was a company at a bit earlier stage of development that we usually, try to consider for the possibility of investment. So it was a very young company, really. As a business, they were founded back in 2017. So our investment took place like 3 years after they initially were established. And the structure of the Ukrainian equity market, it gives the answer to the question, why have we invested into this company? Because should this story be happening, somewhere in the European Union or in the United States, then, well, at the stage of our investments, I think the only source for their investments would be someone from the venture capital. But they would be maybe investing at a later stage, and they would have some mandate for doing investments like that, who would stay as the investor for a couple of years. And we, as the investors, well, focusing at a later stage of the development of the companies, we would be, offering the possibility for investments like 2-3 years after that.
But since our ecosystem, in essence, doesn't have that many players, I mean, the equity market doesn't cover that many segments. So it just so happened that in this company, for a short period of time, angel investors came into this company. Some private investors made their investments in this company, at least for a short bit of time. There was also equity crowdfunding involved. A few venture funds also stepped in, and followed by us, basically. So what happened to the company as a result of these investments? Let us just take it from another angle. Let me also share about why we basically decided to make this investment, as well as why the time, this crisis time, during which this transaction took place, was also of decisive, crucial role. Basically, the company was growing very fast. Definitely, it had a huge capacity, the huge potential that needed to be harnessed. But one of the key factors that basically convinced us of that company being a fine, a strong, a potent company and a wonderful investment to make was the fact that the company took the challenges, particularly during COVID-19 pandemic, very bravely. And the way that this company provided its proposals every day, how speedily they responded to the need to expand their coverage in order to offer more secure and safer medicines provisions. So within a short period of time, they managed to expand their presence from Kyiv and large cities to basically any small region and remote locations in Ukraine. Very non-standard, out-of-the-box decisions and solutions that they demonstrated enabled us to understand that the company was a real powerful player, and we'd never looked back. Since the time of our investment, in Leaky 24. This company has already grown by 4 times in the number of clients. They have also entered 2 successful export markets. This company has basically transformed from a platform that enabled medicine delivery to becoming a health tech ecosystem. Businesses which are to do with healthcare, and they also launched and added LAMP24 and Nasnaga. These are the things which are to do with laboratory studies and coaching in healthcare sector. And another important thing to mention is the response that the company demonstrated to the full-scale invasion of Ukraine. It concerned launching 2 humanitarian initiatives, one of which was the initiative to help to compensate up to 50% of medicine costs for the families which needed this medication, as well as respond very quickly to the changes of the front line. For example, when Kherson was reclaimed, within 5 days, Leaky was already there offering its products to the citizens. In Bakalia and Izium, they showed up within some 7 or 9 days since the cities had been liberated. So they became some of the first ones to come back to these destinations. Another program which they launched was to do with humanitarian aid delivery. They tried to get as much medicine from the whole world, and due to that, more than 20,000 families have received the necessary medication. That's all from me. Thank you very much for your attention. Thanks a lot for your presentation. It's a really nice example. I remember them pitching a few years ago at different startup events. So it's cool to see them developing so much since then. Sometimes I'm also taking advantage. I take advantage of this platform in order to buy some medicines through them. A small question that I would like to ask you before we move on to the follow-up presentations. How accessible or... Oh, we're talking about insurance, war risk insurance, whether or not you're open in this respect and how much you can do in this regard. Well, look, in terms of this company, no, basically for all of the companies, for Leaky 24, no, we are not covering, no, we are not insuring any risks, but basically when we are in communication with potential investors, in particular the European and American funds, as well as some large strategic players who are regarding the possibility to make investments into Ukraine, the question of war risk insurance is a substantial one. And for many of them, it's like a sanitation factor, a vetting factor, which enables them to enter this conversation. Because when potential investors come to realize that there is this huge elephant in the room, and it's possible to physically lose your assets due to war, for many of them, it's a factor stemming them from considering any such opportunities. Thank you very much. Now we are on to the next speaker. This is Yevgen Reznichenko. He is investment director of Dragon Capital, one of the leading investment companies in Ukraine. And not only. So it will be interesting for us to hear about your activity, especially how the situation has changed since the outburst of the full-scale invasion. And also we have some questions concerning war risk insurances. As far as we know, you have managed to involve MIG, if I'm not mistaken, one of this insurance company. Sometimes I go past. Oh, MiGs, the planes we're talking about. So you provided the necessary guarantees. Thank you very much, Yulia. Thanks to the audience for allowing us this time to present to you. To save some time, I'm not going to delve deeper into the detail concerning Dragon Capital and things like that, but This is like a question, why do you want to work for MHP but not for another company, which are very, very similar? A lot of similarities in terms of sizes. We are slightly smaller. Dragon Capital, as I have concluded, is also a younger company because Horizon Capital is 29 years. We are 23 years old. So I hope that we are sexier, we are more ambitious, whilst for the rest of the choices, we are pretty similar. When I was thinking about a case study to present to you, I decided not just to select a case and to demonstrate it to you and say, oh, we have done a great job. Oh, I wanted to make sure that it was practically valuable for the audiences that would listen to us. What SMEs have to think about if they want to attract private equity financing. Therefore, I opted for mineral waters. Truskavecka is the brand. This is not IT, not e-commerce, not banking, investments. We have all of these successful products, but this is FMCG, and I have structured my presentation from the standpoint of the criteria of selection. When we select a company and we are ready to invest in that, it doesn't mean that if your company, I'm reaching out right now to different entrepreneurs. It doesn't mean that if your company does not comply with one of these criteria, it doesn't make sense for us to enter in communication with you. No, on the contrary, every case is analyzed individually. Lots of different aspects are taken into account currently, even nowadays, because we understand that so many people have left Ukraine. We are not sure that they will be coming back. And all of this is highly impactful on the analysis that we undertake, particularly if your business has to do with selling certain goods and the customers of these goods may be young people who, for the most part, have left Ukraine. This may be a real issue for us. But if you're selling water, which one way or another is necessary for everyone drinks water, then this will pose us with fewer risks. So now I'm moving on to the core of my presentation. When we regard any project, first and foremost, well, it may just so happens that when you look at a company, for some reason it catches your eye and you begin to study that. But these cases are not that frequent. More often than not, we find companies for investment while, as a result of analysis of different databases, we read different magazines describing certain sectors. So everything begins with a particular market that is of concern to you. So the first thing that we look at is the dynamics in that market, history versus now and the future. So Truskavecka's case, this beverage brand, its market grows 7 to 8% every year, and in Ukraine, historically, it's grown 15 to 20%, but for the war, this trend would have probably even expanded, and this trend still continues. The second thing that attracts our attention is how well segmented this market is. So this market is highly segmented. We have a big player, Morshenska Water, although I'm not trying to make any promotions for them. So it already has cornered the market. It's got nearly 50% of the market, followed by some other companies with a share of 5 to 10%, and the rest of them have even smaller shares of the market. Understandably, if we invest in this water company, we understand that from the 10th rank, they can go all the way to the third or the second rung in this ranking. So this is something that a lot of capital or equity owners usually ask venture capitalists, how can I back out of this project? So if you can handle this better than someone else, if they are the leader in terms of size, expertise, and innovative product, then your chances are much higher. Next. It's more to do with theory, but it still matters. The consumption of water in Ukraine, on average, is 4 times less than that in Poland, Romania, and other neighboring countries. Well, if we talk about the west of Europe, so the difference is 15 to 20 times. So this already enables us to very comfortably understand as an investor that there are no other options. This market will invariably grow. So the first criteria is analyzing the market itself. The second criterion is the most complicated in terms of relations with the small and medium-sized companies. This is the track record of this company. Once again, more often than not, that situation may occur when you find a business, you go into communication with the owner, with its shareholders, you like everything, the numbers that they're showing to you, their strategy, and you say, okay, I'm ready to make my investment. However, an important element of this investment process is something that we call due diligence. So we need to corroborate the data gained from our analysis, on the basis of which we built our financial model. We have to see that it's valid and true. And this is where the biggest number of issues arise from. Because our environment, and sadly, especially in terms of taxation, is such that a lot of SMEs don't tend to make their businesses transparent. And in such cases, we say to them, well, okay, try to do something in a year, and in a year we will have a meeting with you again and continue this discussion. But from our experience, every time you go back to them, nothing has changed. Because the people begin to count and they conclude they are rejecting all of the changes, and they conclude that it's not worth all of the changes and all of the hard toil. So in the case of Truskavecka, it's a very famous brand that belonged to this large player. It's been on sale for a long time. We had a lot of different numbers that we could verify and validate. Point 3, its business plan, a clear and well-founded vision of the development plan. And here, it's not so much necessary for the company to be ready or to be ripe, but there should be some kind of a vision concerning the future development of their business, especially if this is a company looking for financing, reaching out to us. Some people happen to think, if I send my presentation, or even without a presentation, if I send some information, that'll be enough. I will come to them, and they will immediately start singing praises to me, and they will begin to trim me and do lots of things about me. But you still have to hook the investor if you don't have the clear vision concerning your strategy or plan. But you still have this spark in you, and if you can fire up the investor and show the lines along which you're thinking of moving, then the professionals will definitely be able to see that. They will catch this thing and they will follow your lead. So with regard to Truskavecka, there were 2 different sellers who were selling Truskavecka brand. We bought one of the sellers, and recently we made a decision concerning the second player selling their products under Truskavecka brand. And in the nearest future, it's not that we will monopolize, but we will consolidate this Truskavecka brand in our portfolio. Next, we are posed with the question, how we're supposed to grow. We have our vision concerning growing, because we have already bought new water reserves at the expense of which we can expand our operations. And second, we can also see the ways to update and upgrade different processes in the manufacturing facilities. I'm not going to dwell much on that or dig deeper, but there's one more thing to add: intellectual property, which these days is only gaining in popularity and gaining in weight. So what we are busy dealing with is promoting the brand as like champagne in France, so that no one could speak about Truskavecka but us. But you would be surprised, a lot of producers in the market of Ukraine pour their water, make their beverages, and they call it Truskavecka just because their water pools, well, reserves, is very near to the location where Truskavecka water deposits basically are. So this is an interesting comment. Even the chemical structure of these waters may differ. So when talking about these markets, basically we have to speak not about the volumes of production, but about the water itself, because the water is the resource which is scarce and limited, and in Ukraine there's not that much drinking water. And it's wrong when you think there's a lot of drinking water available. Next, it's intellectual property. I would like to praise the government because at the beginning of this year, a law was enacted that allows them to sell special permits and for intellectual property. This is crucial because before that we had a situation like if a company was created some 20 years ago, it was functional and you were forced to invest in the corporate rights of this company because it wasn't able to sell its intellectual property to anyone. You understand, 20 to 30 years is the period of time where a lot of lawyers will find 1,001 problems not to invest in this company. But finally, this barrier has been overpowered, and we can put a tick for the state in favor of the state. Next point is marketing. If this is FMCG, you have to understand and position yourself properly. For example, the trend of the recent years, if before the war, shares and stocks, different promotion campaigns were some 20 to 30%. Nowadays, about 60% of the different goods and commodities are sold according to different promotion campaigns. So these are the things that also have to be borne in mind and exploited properly. Next, we intend, within this project in particular, this work is underway. We would like to buy a plot of land, establish there an industrial park and build a new manufacturing facility, a new plant that will allow us in the short term to corner this market and become the leader of mineral water producers, spa water producers. We are also thinking about the law on investment nannies because industrial parks and investment nannies are closely to do with that. But in the previous panel, Evgen Barani said we analyze cases as if investment nannies are not in place. And if that turns out to be true, then this is a pleasant advantage.
Now, we build a plane where one axis would be marginality, the other axis would be the volume of the market. That's a very kind of fundamental approach, saying that mineral water, it's in the third segment. There's still drinks like cold tea, cold coffee, that's in a different segment. There's sugarless water, that's another segment. So this is how we build our strategy. And we define whether we want to access those markets. And then we calculate the different ERRs and PVs and many others. The fourth, then I'm not going to mention on that, that's the managerial team working on the project. We have to understand the owner of the business or the management in there. These are the people that will give the results, and these are the people that we trust. The fifth, that's the standards and proper financial management, environmental and labor practices. So this is something that I mentioned before. It's important for the company to have some fundamental kind of financial accounting, financial control system in order to verify the figures, because there's true cases when a furniture producing company has 90% of their products exported to Switzerland, Norway, and Austria, then it has most of the income in euro. There's a great marginality, but the people cannot confirm their financial indicators, and we are unable to invest in them. So when we are coming into the business, the first thing we do, we kind of make sure there's a proper financial control and reporting. We're trying to make this company as much transparent as possible. Then we also think about the debt financing from the international financial institutions. This is something that we think already now when we structure the business, when we kind of divide or define different product lines, and we make the corporate structure understandable and transparent. Going back to this question of Yulia about the insurance that we've received from an international institution, it wasn't me, it was the project institution of the project So I don't have all the details, but what I remember from the conversation with my colleagues is that the main thing was a long and very careful due diligence performance. Everything has to be correct, everything has to be understandable. So talking about SMEs, acquiring guarantees of that sort or insurance of that sort is complicated because the investors covers all of this due diligence. They're done in a very detailed manner. And sometimes, it's even more difficult than the business itself. Then there's a regulatory environment. There's the limitations of the martial law period. And I would like to go back to practice once again. What hinders us in our operations? As Roman mentioned, as Dragon Capital and Horizon Capital, we primarily engage funds of the foreign investment entities or organizations. Now, we receive this money abroad. There's a legal entity established that receives the money from the international investors, and then the funds are in different manner invested into Ukraine into a very specific business. So what's preventing us from more operation is the Regulation 18 of the NBU. It prevents repaying loans, and it introduces some limitations on the currency exchange. So talking about the incentivation of the investors, like try to be on investor side that you have to invest $1 billion in the Ukraine's economy, but you're not able to take them back, to withdraw this money. It's nonsense. So if you would be an investor, you would never agree to that. So all those steps taken by the NBU, if that's a loan from a foreign entity, now in this case they can be repaid, but there was a case of Dragon Capital. We have a legal entity that took a loan from a foreign bank, and then this money were received in Ukraine. So we are unable to repay the loan to the foreign bank because that's a not Ukrainian company that was taking a loan. So it's kind of the same, but technically there is no possibility to repay your debts, even if you have a financial ability to do so. So it kills the trust, because it would need years to build the trust, and then you have a default. Well, with kind of help, we managed to avoid this default, but still, this trust could easily disappear. And in conclusion, what I've already mentioned, that in addition to kind of a financial component, there's also a social component that is important to us. Because we're a big market player, it's important for us to invest into those areas where our business are located. So whenever we're talking about the industrial parks or the development of infrastructure, surely it has an impact on some of the areas where the businesses are located. We're trying to pay attention to that. Thank you. I thank to Yevhen. So these are very interesting food for thought, and then the experience that you've described on the insurance of military political risks, on the resolutions and directives of the National Bank of Ukraine. These are the things that we need to work on, and surely we are trying to engage as much as possible. We're going to the next panelist, Scott Richards, Managing Director, Head of Eastern Europe Advisory at Cross Boundary in Eastern Europe. And now, according to my understanding, Cross Boundary works at different countries of the world. It has an experience of impact investment, of blended financing, and they're also considering Ukraine. And the fact that Scott came to Kyiv, came to our event, this is again evidence of that. So, Scott, it would be great to hear your experience, maybe a comparison with other countries or something useful that could be brought to Ukraine, because you can see with your own eyes the situation we have. Because even under conditions of the war, you're ready to come to Kyiv personally and to consider different possibilities. So, Scott, please. Thank you. I will be speaking English, surely.
It's a pleasure to join you and an honor to speak to everyone today. So allow me to start just by introducing Cross-Boundary as a company, and then I'll give you a sense of what sort of investments we're working with here in Ukraine and what some of the key lessons learned and the trends in investment that we have seen since the start of this stage of the war. Next slide, please. Cross-Boundary is a global firm operating across underserved and emerging markets globally. We have 24 offices and approximately 200 staff and advise a broad array of investors and capital seekers. In practice, that means that we are often helping firms to source capital, both debt and equity. We help strategic acquirers enter new markets. And we also advise DFIs and governments, and presently are the largest outside advisor to the DFC. In terms of industries, we do operate across sectors. So just to give you a sense of where our focus is, I'd say there's quite a broad spread across these sectors. I'll give you a closer introduction to our work here in Ukraine, as many of the transactions are ongoing here in Ukraine. I won't be able to share any names, but we'll be able to share certainly some sense of what we're seeing in terms of trends. Finally, in terms of the groups of investors and companies that we interact with on a global basis. So naturally, there are focused emerging market investors. Oftentimes, those are funds, private equity, venture capital, or a combination of private markets and public markets funds, governments and donor organizations, corporates with multi-country operations. We do interact quite closely with family offices and impact-oriented investors. Moving down to development finance institutions, to DFIs, we work closely with a broad spectrum of DFIs across geographies. In many instances, we work with foundations to invest according to their strategy across the emerging markets. And then finally, working with a number of research partners and partner firms to basically strengthen their operations in emerging markets environments. So what are we seeing today? First and foremost, and I think this will come as no surprise, starting on the right-hand side, generally, we see investors most actively oriented in Ukraine towards asset-light businesses that are driven largely by intellectual property and have a global market focus with hard currency revenue. I'd say that's consistent with what we see across the global emerging market space, and it comes as no surprise that that's where capital is entering into Ukrainian firms first. Examples of those sectors include technology, so ed tech, fintech, defense tech, artificial intelligence. We've worked on live transactions in defense tech, for instance, which was a combination of defense tech and artificial intelligence. We've seen recent transactions from the team over at Horizon and in ed tech, and then also in software services, where essentially the revenue stream is global, the market is global, and the talent can be dispersed on a global basis. Now, what are we starting to see in terms of a shift? We're seeing a lot of transaction interest, in particular, in agribusiness, in real estate, including business and industrial parks, logistics and building materials, and in the energy space. Now, the key considerations that we're primarily interacting with amongst investors into these spaces, first and foremost, geography. Again, it will very likely come as no surprise that investors are most comfortable in the west of Ukraine, and over time, we expect that area of comfort for investing into companies driven by fixed assets to expand from west to east. Second, the most executable transactions typically include a small pilot phase followed by a scalable expansion plan. An example of this, so we're working with a group that is focused on agribusiness and logistics. Their initial transaction is approximately a $15 million transaction that includes multiple different sources of capital. That can be expanded up to a total of about $150 million across 34 locations. Now, it's important to have both an initial pilot to illustrate operational capability and executability, and at the same time, a larger scalable plan to bring on the right types of partners that want to deploy capital in more significant increments. And finally, a well-developed capital stack. Certainly what we have seen, and I'll dive into this a bit more in the next slide, there are a variety of sources of capital which, put together in creative fashion, can really drive investment that is oriented towards capital expenditure. Now, looking at the capital stack, debt funding. So we do see some instances of bank funding and bank partnership with local banks here in Ukraine, naturally DFI partners. So EBRD, for instance, is very likely to hit their 2 billion euro target for investment this year. And there is a panoply of other DFIs working alongside EBRD for investment into Ukraine. Finally, we do see some activity from private debt investors as well as impact-driven debt capital. Next, export credit agencies, in particular for firms that are investing in physical assets and processing capabilities. Oftentimes, they're acquiring technology, acquiring capital goods from abroad and importing those to Ukraine. We do see a willingness by international export credit agencies to provide credit support for those transactions. Oftentimes, that will open the door to anywhere from 80 to 90% of the cost of the capital expenditure to be covered from a risk perspective by ECAs. Next, insurance and blended finance. So these are more in their incipient stages. Naturally, there's been a lot of discussion around war risk insurance. We have seen quite a lot of interest from a variety of governments and development financial institutions to broaden the option set with respect to war insurance. Blended finance is a tool that we have used across the global emerging markets stage, or across the global emerging markets area. And typically that will involve some slices of the capital stack absorbing a greater volume of risk in order to crowd in private capital. And then finally, with respect to equity, naturally, no matter how complex the capital stack may be, there is a need for equity at the bottom of it. I would say at this stage, we do see a broad array of investors across the Americas, across Europe, as well as in many instances, East Asia, and to a degree in the Middle East, that are actively involved in transactions and, in our view, very likely to be deploying equity capital in as early as 2024. Now, blended finance is a term that does get thrown around a fair bit. So to just give you a clear illustration of what we mean when we say blended finance, typically that involves development funding sitting at the bottom of the capital stack. That may be provided by development financial institutions, may be provided by governments, and it may be provided by impact investors, foundations, or even family offices. The goal of that capital, the role of that capital, is to absorb a greater volume of risk than other sources of capital in order to free up and encourage private investment on top. Oftentimes, we do see those instruments, that stacking of capital, working alongside risk insurance and guarantees, or coupled with technical assistance, what we refer to as a technical assistance sidecar. So let me stop there, but yeah, wonderful to speak to everyone.
Дякую, Скотт, за такий global out.
I thank you, Scott, for the global outlook.
Speaking about what a lot of investors are targeting now, we wish you a lot of success in supporting such investment projects. I will revert with my questions after all of the presentations are over. But now I'd like to move to Sergei Pozniak, our next speaker. Those who don't know Sergei, I think everyone knows him, but anyway, let me introduce him. Sergei Pozniak, the founder of Finstream and Kronvest companies, the chairman of the Association of Veteran Entrepreneurs, junior lieutenant of the National Guard of Ukraine. He's keeping very busy. He's got the experience of funding and financing for small, maybe micro businesses. Can you please tell us about what happened to you during the war, from before the war, how your approaches have sent? In addition to that, Sergei also pilots different kinds of interesting projects like veteran bonds, and he's helping the veteran business very much. So he is interacting very closely with small businesses in Ukraine. So the floor is yours. Good afternoon, dear friends. It's really cool and great that the progressive financial community invites people in uniform here up on the stage, but not takes away as a business grouping and tries to keep all of the veterans away from themselves. You cannot imagine how important this is, to be heard, to be understood, to be embraced, and to be paid attention to. Thank you very much indeed. This round of applause goes to you, but not to me. Yes, indeed. I'm still a serviceman, like a junior lieutenant of the National Guard of Ukraine, and since 2014 from 2014 to 2016, I fought, and I was a veteran. But then again, on February 24th, 2022, I decided to go back to war, and in autumn, during one of the successful storms, I unfortunately stepped on a mine, which took away one of my feet, but I'm here. What makes it cool about financial business is that whether it's war or not, whatever happens, your obligations still haven't been withdrawn. You have to keep moving and you have to keep working. So in addition to being a junior lieutenant of the National Guard of Ukraine, I'm also a member of the board at Finstream. I'm an advisor for attracting investment and owner of 2 financial companies. And just because accountability hasn't been canceled, I have to keep moving. I have to growing and keep being big, and I'm supposed to be right now to be in hospital, but I took a leave in order to make my presentation here, and I have to combine all of these capacities in me. And this is the factor that also needs to be accounted for. But for more than 20 years, we have been dealing with financing SMEs. We know that all too well, from micro to middle-sized businesses, and we very much enjoy working with SMEs because the portfolio of SMEs has recommended itself very well during several disasters. This is a highly diversified portfolio with a high level of revenue. And And at the expense of that, it enjoys a great deal of sustainability. So it's like spreading our eggs in different baskets. We have a lot of these baskets, even though the war is still ongoing. Although during the first 2 months of the war, we sagged a lot, but then by the month of August last year, we managed to start breaking even, which was followed by making some revenue. We have only four projects out of nearly half 100 that have defaulted. So in our portfolio right now, there are under 5% of such projects. We had to restructure the whole portfolio. A lot of projects had to be awarded special terms and conditions. But overall, I'm very much happy that we are dealing with a lot of small businesses, but not just two or three or a handful of very large ones. When one of them sags and the whole portfolio is sent reeling. Let me just tell you about our model that enables us to enjoy the sustainability. We have the corporation investment company, Finstream, two investment companies. Corporation investment company owns two companies and also makes its own investments. 80% goes into the capital of financial companies and issues loans for SMEs, while 20% is direct investment equity financing. So what makes it special from my perspective? This structure is controlled by two regulators, the National Bank and the Commission, the State Commission. In particular, in that part which is on my left, there are also investors, shareholders, and I'm very happy to see some of them being present here. There is also the supervisory board, the board that exercises oversight over the assets. So there's no much leverage, because these regulators make this structure transparent and steadfast. But the actions of the company itself and the whole group make sure that all of our actions are consistent in achieving certain financial results and gains. And it's a great benefit, added benefit. During blackouts last year, the portfolio once again sagged, but not for a long time. And again, just because we have this steadfast and resilient portfolio, we have SMEs in our portfolio, once again, we were able to start making revenues, even during the war. Additionally, everything is funded in the hryvnia, the national currency, which makes the Ukrainian hryvnia an attractive asset. Working in hryvnias also strengthens our currency. Besides, we have already been through the stage of going for the flexible exchange rate, and the bank has demonstrated its ability to work with different risks, even though the National Bank has demonstrated its aggression and potency to go to the market with its different interventions and regulate the exchange rate. Still, we are enjoying right now the greatest gold and foreign exchange reserves in the whole history of Ukraine. So financing all of these SMEs is done in the Ukrainian hryvnia, which makes it on our part rather a stable business indeed. The second point to mention in this regard, I have called this slide the best of the best. Why? Because this segment is only 20%. It's not always 20. Sometimes it goes up to 30% because a portfolio is a living body, it keeps changing. Out of the remaining 80%, which we fund applying different debt instruments, we get to see that this is a business. Once you start working with it, it's going to last. So these best of the best ones, which comprise 80% of the portfolio being backed up at the expense of different debt instruments, we get to see them, and then we go to them, and we have the access to the best projects, mind you. We go to them and we say, well, look, we are not going to back you up financially as external finance. We are going to become part of your equity. A lot of them agree. There are some specifics in terms of working with SMEs. There are always very charismatic owners around who believe that they are the god, the supreme deity. And if something gets precarious and the management is not reliable enough, and we had a few cases like that, believe me, under the management of such leaders, we dislike that. Because no matter how charismatic they are, these owners, they still believe that you are depriving them of something. Although you're making investments, you're providing and upgrading their equipment, you still have to be very cautious, extra cautious around these people. Nevertheless, if you have covered these 80% of expenses as part of the external loans and credited, you have been working with that for more than 2 years, you know all of the cycles of such companies' operations, then when you go as an equity investor, you know what you're dealing with, you know all of the ins and outs, inner workings, all of these methods of how to proceed. And just in case, you know that it's necessary, sometimes you have to kick in as a management. For that, we attract outsourced experts and we implement them in the companies. So this is one of our cases. The company called Fuse Foods and I'm Ready. These are two types of veteran businesses. We have funded the construction of a plant to make tinned meat or cans of meat. So this was the time when we had to plunge into operations and attract different experts, because these were ex-military people. We managed to do, but there were some difficulties in this respect. This business turned out to be quite well, and the profitability is 37% a year.
Well, unfortunately, it was it had a production in Dimmer. It was an occupied territory, but the management managed to preserve their facilities. And when the Russians came in, the already they've relocated. They received some contracts with the Ministry of Defense. Surely there were some peculiarities in terms of payment, but this company has prospects and it deals with, well, it preserved its production capacities, so this project is still workable in spite of everything. And in the beginning, there were some beneficial conditions, and then there were standard conditions. This is where we had some part of the equity involved. The next was a small project, and we have a lot of small projects, in fact. So we kind of entered in equity, and the listing was provided specifically for that project. The person came up, says, I have an interest in one project. Like, could you take a look at that? I would give the money, but I don't want to analyze it by myself. But it's sort of interesting because it's an internet provider called Avatar. It's a local one, small, but a fairly profitable one. So we kind of analyzed the business, and it's our must-have because we do the analysis of every business. If you work with SMEs, it's always kind of an individual story. It's always the individual kind of procedures for the transactions, because for SMEs, there's the small windows of opportunities. And secondly, it's important to align with the life cycles of the company, because if you are providing money to an agricultural worker like in January or February, then already you would need to pay like in May or something like that, because if he didn't sow or he didn't sell his yield, then he would have some penalties to be paid. And at certain. So it's important to have everything done, in time. So you need to be very careful, and you need to select the proper type of funding and the proper timetable of funding so that it would be properly aligned with the operating cycle of the company. Now, that investor, he bought the shares of the fund for that amount of money, and we came to have the following structure. Okay. So that's the PDF. Okay, we had to have it like, the structure coming one by one. So the foundation has bought the rights of the LLC who owned the business of that provider. When this business developed and has generated the necessary amount of revenue for the investor and for the fund, the investor, and we had a repo agreement for a certain period of time. So he sold us our shares back. We've returned the money, and he bought the corporate rights. He bought our share together with the premium. So the investor got his business with the profitability of 48%. So this is how we supported the SME. We supported the establishment of our local investor. Besides, we've managed to earn some money on that. So we've also issued private veteran bonds. They're low income, only 6% annual, but we try to engage the money, and the emission is only 50 million, a small one. It's a pilot, and we try to engage some money in order to return the entrepreneurs who are coming back from the front line, and they're coming back just like me, with the disabilities, because otherwise you won't be able to return from the front line. In order to return them to life, because a soldier entrepreneur, when he joined the army, he went to the front line. After the front line, you start everything from scratch, because when he returns, all of his business, all his careers and achievements, they disappear. And the society, I believe, the society has to support him. So we took this social responsibility. We organized this. This is also our tool. This is also about SME. We decided to organize this tool, to create it, and to create the funds for the funding of the SMEs. So thank you all. Glory to Ukraine. Sergey, thank you for describing your experience, some of the approaches. That's a bit different segment than the one explained by the other panelists. Surely the scope of the business, but that's also kind of an additional niche. There's demand for that. That's an alternative for banking, financing for SMEs. I would like to pass the floor, and I would like to introduce our next panelist, Irina Jus. She's the director of the investment companies All Partners. That's another investment firm, another experience, and in my understanding, you've advised one of the USAID projects on selecting SMEs for investments and for support. So could you please share your experience? Good afternoon. Thank you for introduction. I thank you to guests and colleagues. I'm a representative of the investment bank, so I will have a different approach to investments, to practical case of investing. So what the investment bankers are doing, we don't have the funds that we manage and then to do the investments, but we know who has those money. And our major task is to engage the funding for our companies and to do some accompanying, meaning we help to engage the funding for the clients. I'm going to describe you one case that we've done end of 2020. That was an investment in the capital in Ukrainian firm from a strategic investor. So earlier we heard about the examples of investments from private equity funds. So that's going to be kind of a different point of view. We'll be primarily dealing from the standpoint of the company that is willing to engage investments rather than from the company willing to invest. So that was the following case. A Ukrainian company for a games Ukraine, and that's the developer of video games. They decided to get some equity financing for the development of new kind of expensive game. It had a big budget of several dozens of million of dollars. Because of confidentiality provisions, I cannot give you the exact number, but it was over 10 million US dollars. The share that was received by the strategic investor, and that is a global technological holder holding 10 cents. It was a blocking but minority share in the project. I can give you some of the major peculiarities of this agreement. Go to number one. It was the first and only investment of Tencent into a Ukrainian company. The second peculiarity, it was fairly sectoral, so let me explain it in a more detailed manner. It was a direct investment of a strategist into the minority share of the equity, while the company would still preserve the intellectual property, the IP rights that we've mentioned. The company also kept the rights for publishing because that was very important for that industry. This sector of industry is interesting because game developers, well, due to large budgets, we're talking about tens of millions of dollars, they cannot afford themselves to do that. So they take kind of prepayment from publishers and they fall into a trap because they might be losing their IP rights, intellectual property rights for their own development, and they're losing the majority share of the future revenues. For this prepayment, for the ability to develop money, in the end, they lose the major benefits from the completed project. So in our case, it was all different. The investor has received a minority share, while the rights for the IP and for the publishing were kept with the developing company. The third peculiarity was that it was an investment into the company because it was a cash-in investment, in fact. So all this money went to Ukraine. So all this money went to support a team developing this product. Just for you to understand, the development of a game is maybe taking like 5 years. So it's a long process, and all the money were spent on the development project. The whole team is located in Ukraine, so most of the costs incurred as the result of the development of these video games, there will be kind of in Ukraine, so it gives the best impact on the economy. And the last peculiarity that I wanted to kind of underline before giving you more details is that all the investments money was the whole investment was provided in one transaction. And why is that important? The investment took place in the beginning of 2021. So if the money would be coming in different transactions, because the development of the game takes more than 1, 2, or 3 years, surely the investor, what was the start of the full scale war, the investor would be willing to to refer to force majeure provisions in the agreement. So not sure there would be a chance to finalize this project. But since the conditions agreed were the following, that all the money was provided in one transaction. There were no questions. And when the full-scale war started, there were kind of no questions as to referring to force majeure. And now I want to go deeper into details from the standpoint of how the company is engaging this funding, how the whole process was taking place. Back in 2018, the owners started to spend their own money on the development of this game, but then in the end of 2019, they understood they won't be able to do that on their own. So they have this idea of engaging strategic investor for this project. Surely the companies from certain niche, they don't always have an experience of attracting investments. In our case, this M&A or the investment function was to be fulfilled by sale. But I'm not saying that this is the most effective way of spending the sale resources, because that sort of distracts the CEO from operational or other decisions. Our long-term contacts with the CEO kind of turned in a way that we started, my company sole partner started to help them with attracting strategic investors for this project. Just a couple of words about the major phases of this engagement. So the first phase was to identify the investor and to do some preliminary negotiations. So we've identified Tencent and other investors. The next phase was to coordinate the term sheet, the main terms of the transaction. So we've received their draft from Tencent. We had several negotiations, and finally we had a signed term sheet with major terms of the transaction. Then we've had this due diligence stage that was mentioned by my panelists. It was very detailed, covering funding, taxes, legal aspects, personnel aspects, because in case of IT projects, that's a fairly important element. Surely we've accompanied this process and at the end of due diligence, we came up with additional requests from the investor, because he wants something to be, covered before the money would be transferred and the corporate rights would be transferred as well. So one of the finalizing stage would be to coordinate the transactional papers, the purchase and sale agreement for shares, because in case of this project, there was a minority partner, and we tend to engage the best experts in the field of corporate rights. And that case was not different, because they helped us to, to coordinate all the legal aspects, and our company was coordinating together with our customer on the commercial aspects. Now, all of that turned into kind of signing the transactional agreement. So that was not the end. As I've mentioned to you earlier, signing does not mean that you have a closed deal. Closed deal is when the company receives the money and the investor receives its own share. So for that, you would need to fulfill some of the conditions that came up at the due diligence process. So finally, we've closed this deal. So we believe this is a very unique agreement for that sector, for that market, because the company preserved the majority share. It has received all the money to fulfill this project, and the company also preserved the CIP and all the intellectual property rights and all the rights for the future distribution of the game. And it continues to operate. So we're expecting for the release of their product. Thank you for your attention. Thank you. Let's go to the conclusions. I will have a small question to everyone, and I would like to have a very concise answer for that. Your key recommendations for the state and for the donor organizations, or maybe international financial organizations, or like our projects, like USAID, so your major recommendations on what should be changed in order to promote the attraction of investments to SMEs. We've already heard something, but just kind of in sum up, kind of concluding remarks, I would say. Let's start with Roman, and let's follow the same kind of procedure. Well, thank you. I will say that this resolution number 18 of the National Bank of Ukraine poses a very significant challenge. It takes the possibility of the investor to withdraw his money, and besides, it prevents the Ukrainian companies from the chance to develop. Because if we'll take a look at what is happening with the Ukrainian business, when the internal market started to reduce kind of in the, after the full-scale aggression, many Ukrainian companies, they started to think of export and coming to the European markets. But in order to be successful in European markets, you would need to buy some European companies, or you would need to buy factories or assets. And that means you would need to kind of transfer that capital from Ukraine in order to invest that. But this resolution number 18 of the National Bank of Ukraine prevents this from happening. The other aspect, that's everything to support the development of Ukrainian export. But as long as we are restricted by the war, supporting Ukrainian internal market is important, but still there is an uncertainty about it. So the growth, more stable, more predicted, it will result in an inflow of foreign currency. It's possible through the development of export, or through the growth of export. Thank you. Yes, I think that's the most important thing. Yevhen, what do you think? I believe that talking about the SMEs, most important is to make this bridge between the investors and the entrepreneurs. During the first panel, we've heard about Miltech that was done, and that facilitated the whole operation. Why is this important? And it was mentioned today that whenever you're coming to the owner of the business and you're offering some investments, the first thing the owner think is that someone wants to take away his business. So that's the heritage of the 90s. It's very hard to kind of overcome this first stage. It's hard to gain this trust. Like, look, we've done this one, and we don't have any intention to kind of cause harm upon you. So that's one thing. So the state has to do some kind of work to raise awareness. Many knows about USAID, many knows about grants, but less amount of people is aware whom to contact and how to contact in order to get assistance in securing the grants or other source of funding. So we would need to create a system that would combine the investors together with SMEs. Thank you. Good proposal. We are dealing with awareness raising about different tools of funding or financing. Scott?
What the state or donors should do to foster investments into SMEs or businesses in Ukraine in general?
Certainly. We've seen actually quite a creative set of approaches that involve investing in larger businesses whose supply chain, for instance, also interacts very closely with a broad array of small and medium-sized enterprises. I think there's a number of different avenues for investors coming into Ukraine to interact with and support the existing ecosystem of small and medium-sized businesses. Secondly, I think we've really started to see some interesting flexibility on behalf of international investors, development financial institutions, to structure capital investments in ways that are more effective and more appropriate for small and medium-sized business, which is to say, at times coupling a combination of senior mezzanine debt with equity instruments, looking at flexible, redeemable equity instruments that sidestep some of the common challenges around liquidity, which can typically be particularly challenging with respect to investments into small and medium-sized enterprise.
Thank you. Сергій, ваша думка.
Sergey, what do you think? Because you're actively dealing with regulation of non-banking institutions, well, meaning deregulation, I would say. Yes, indeed. Well, unfortunately, the regulator tends to oppose, but still there's a dialogue. Look, we clearly understand that there is a perspective of having some support from donors from somewhere else, and we would need to have a kind of a range of financing tools for attracting the investments, EC and other shared investments. And I surely support Yevgen that financial literacy is something that we must have. It has to be financial literacy for the owners of the project. Then the audience should be also aware of the available tools. That should be an ecosystem, because we have a funding program for the veterans business. Now, in this ecosystem, it all starts with education. We have a 10-day course. And I'm a member of this club, and we have pitching in this club. We kind of pitch these projects. We select the decent one, and they get the funding under this program, and then in the association they could be receiving some mentorship assistance. So we have a full cycle of support, and as a result, we have a very successful projects. And secondly, this is something that we promote for a long period of time. We need to reduce the lower threshold for attracting, for going into EC. Now it's 1,300,000 hryvnia. Well, we could kind of, we 1,800,000. We should be reducing that by half, and it would allow to kind of attract more funds, internal funds, meaning that the people would be, taking away those money in order to, and we'll take it and we'll invest in this in economy. And maybe this will add some drive and it will add some possibilities for investing into small and medium enterprises. Thank you, Irina. Your thoughts. I thank you. I would agree with everyone. And let me tell you more about the grant portion, because should we take a look at the accessibility of private equities? It's all for medium and large enterprises. So in case of private equities, that's over $10 million. The others, this is not covered by the private equity, so we don't have players like that. And I don't see any possibility for them to appear, except for some rare cases, as it was with the company, Serhi's company. The idea, and this is well tested on the other developing markets, the grant organizations, they can be the first limited partner in certain funds, which will be focusing on MSB and not exactly on equity. That could be on mezzanine. That could be combination of different tools. But unfortunately, we don't have too many institutions who could be providing financing for this type of businesses. And I think we should increase the number of these organizations, and the donor organizations could be something to organize that. And then the private funds would come up. And when there is a first limited partner, then it's easy to find the second limited partner. Thank you. Thank you for the presentation. Thank you for this conclusions. I believe we offered a wonderful conclusion. There's no need to repeat anything. We've heard some of the most important aspects from the standpoint of the state, deregulation, where we need to have a risk-oriented approach. We've heard some focus areas. So what's important for the investors, what has changed over the war, the insurance of the military political risks, and as a project will support part of these directions. We're actively dealing with the military political risks, and our grant programs are also designed to support the SMEs through, particularly through the debt financing, but there will be additional tools. Hopefully, we might take a look in the field of equity in financing. Maybe we should have some risk-sharing mechanisms. It's all in progress. It's all under discussion. These are future plans. And I thank you today for your involvement, and hopefully it was useful. Thank you. Okay, any questions from the audience? Please. Okay, if we don't have questions, then it's all clear. And let us invite you to the lunch, to informal kind of networking. Thank you.